හරිද? dah awak tap කරා join කර පටන් ගන්න පුළුවන්. හරිද? Right. Lamai, can you all hear me properly? Lamai, can you all hear me properly?
Yes, sir, can hear.
Right. Good. Okay. So we are about to start the mock paper or the model paper discussion for JMC under the JMC virtual learning platform. Right. So thank you everyone for joining with me. Right. Lamai, as you all are aware, JMC online learning platform, the virtual learning platform, has been organizing this seminar series for so many number of years. So today what we are going to do is we are going to discuss a target paper, a mock exam paper targeting the upcoming February exams. So you all know that you all have around closer to we cannot say exactly 3 weeks, but around 17-18 days are left for the exam. So if you all can study the areas that I'm going to discuss here, you will definitely get A pass. And this paper I have set up in a level which is more than the toughness or the complexity of the paper would be little higher than the normal paper, but practicing this type of paper would be really beneficial for you all, right? So please stay connected with me. I will please now I'll send a message for everyone. Right, whenever I'm asking something, please do either respond through the chat box or you can unmute yourself and answer. Right, I hope you all got the paper. If somebody hasn't received the paper, let me share that to the chat so that you all can actually use it. Right. Okay, I have shared that to the chat box as well. Right, okay, we'll start. Right. Lama, you know that in your paper, you have 3 sections, section A, section B, and section C. Section A has 40 marks, section B has 40 marks, section C has 20 marks. You all know that section C is the sole proprietor question. Section B, you have the trial balance question, you have the manufacturing account question, and you have the bank reconciliation question, and you have the correction of errors question. Apart from that, there can be a little bit of questions from the accounting equation and from the parliamentary books as well. Then this 40 marks, part A, in this 40 marks question from the section A, LMI, they can test anywhere from your syllabus. So out of all the 6 chapters, there will be questions. So first of all, we'll move on to chapter from the part A of the paper. Right. So we'll straight away move on to the question paper. Right. Look at this first question, Lamai. Increase in assets or decrease in liabilities which will increase equity, right, without the contribution of equity participant is known as, right? If the assets are going up or the liabilities are coming down, and end of the day, if your equity is going up without owners contributing an additional capital, then what is that? That is an income. So what is this definition, Lamai? Definition of income. You know the definition. If the assets are increasing, for an example, cash sale, cash will increase. Credit sale, debtors will increase, right? Or a reduction of a liability. If you are going to set off a particular credit sale against a liability of you all are having, right? So either a liability would come down, and end of the day, because of the sale, the equity will increase. Because of the sale, the income would increase. As a result, the profit would increase. So equity would increase, and equity is increasing not because of a capital contribution. then there is an income. At the same time, remember the other remaining definitions. Expense definition is totally the other way. It's not increase, it's decrease in assets or increase in liabilities, which will not increase but decrease equity without not the contribution but the distribution of equity participants. Then that is called an expense. Right? Now you know the two definitions. Then the asset definition, present economic resource as a result of past transactions and events where the control is within the business. What is the definition for liability? Present obligation as a result of past transactions and events where the settlement requires outflow of economic resources. What is the definition for equity? Equity is the residual interest after deducting liabilities from assets. So remember the 5 definitions. It will be tested in the first part of the paper. Part A, the definition will be tested, right? We'll move on to the second paper. I hope you all have attempted the paper. I shared the paper little few hours ago to the WhatsApp groups. But try to. We'll try to do the other questions then. Look at this one. A document issued by the suppliers when delivering the items to the customers is known as. Document issued by the suppliers when delivering the items to the customers is known as. Right. Now, regarding these other source documents, let me quickly revise your knowledge. Lamai, let's say this is the factory. Okay. This is the factory. This is the supplier. This is the supplier. And this is the material warehouse or the raw material warehouse. And this is the purchasing department or the procurement department, right? So let me try to explain this in a very simple manner. When factory wants the materials, they ask that from the warehouse. Okay, when the factory for their manufacturing process, they ask for the materials. They ask that from the material requisition note (MRA), right? So the items are requested through the MRA. If the items are there, the warehouse will issue the items using an MIN, material issue note. Material issue note. They ask using MRN, they will issue using MIN. If the materials are not there, then the warehouse is sending the message to the purchase department to purchase. So that is called the PRN, purchase requisition note. If the items are not there, then the warehouse people will send that information to the purchase department to purchase the items. Then the purchase department will ask for the prices. They will be using a quotation for that. They will ask for a quotation, right? They will ask for a quotation, right? They will ask for a quotation. Let me put it like this, the arrow. Once the price quotations have been asked, supplier will send the quotation. Supplier will send the quotation. Then if the quotations, if they are happy with the quotations, then the purchase department will send the purchase order. Purchase order will be sent, PO. Right? So when the items are ready, then the suppliers will be sending those items to the business with a goods delivery note, GDN. Suppliers will be sending the items to the factory premises or the business warehouse with a GDN. At the receiving department, when they accept the goods, they issue a document called GRN, right? Raw material warehouse people, there's a receipt deck, no? At the point of they accept the items, they will issue a document called GRN, goods received note. Then the supplier will send the invoice to the procurement department for them to make the settlement. That is how literally it works. Items requested MRN, items issued MIN, purchase requisition note. If the items are not there, then they will ask for a quotation. Then the quotation will be sent. Then they will send the purchase order. Then the items will be delivered using a delivery note. Items are accepted using the goods received note. And afterwards, they will be sending the invoice. Okay, right. So now, if you look at in this question, what is the document they are asking? The document issued by the supplier. Document issued by the supplier when delivering the items. When delivering the items to the customers is known as what? Goods delivery note. Goods delivery note. Okay, goods delivery note. Hari. Lamai, එටික ඕකේද? තේරුණාද? right? හරි. මෙච්චර කියලා දීපේ තේරුණා නම් මට මැසේජ් එකක් දාන්න ඕකේද කියලා. if you are okay with it. තේරුණාද? දාන්න මැසේජ් එක. right? yeah, okay. right. good. Always cooperate with me. Please have the dialogue with me so that it'll be really easy for me. Remember, there will be definitely one question from these other source documents. There will be a question. Right. So we'll move on to the next part of the discussion. Right. Look at this question. The government has initiated Clean Sri Lanka project. Government has initiated Clean Sri Lanka project that aims to address the cleaner physical environment. Cleaner physical environment and a nationwide moral commitment. Nationwide moral commitment to enhance the ethical principles. Enhance the ethical principles. What is the most relevant environmental factor? What is the most relevant environmental factor applicable for the above project? For the Clean Sri Lanka project, there will be number of factors that is applicable. They are asking what is the most applicable among the items given. So we got the economic environment, technological environment, legal environment, and the ecological environment. What do you think? Right? Yes, it may have impacts on all these factors. There's no doubt, right? But what would be the most appropriate one? Yes, very good. Most appropriate one would be the ecological environment. Most appropriate one would be the ecological environment, because cleaner environment is one of the prime objectives of the project. Right, very good. Right, we'll move on. Right. Look at this question. Chamat traders purchased a motor lorry for rupees 4 million on 1st of October. 4 million on 1st of October 2022. The lorry is depreciated at 20% using diminishing balance method. That is the reducing balance method. Calculate the net book value. You have been asked to calculate the net book value of the lorry for the year ended 31st of March. 31st of March 2024. One thing you need to remember, you need to carefully read the questions. Sometimes some people might just calculate the depreciation and try to find the answer. No, they are asking the net book value. What is the meaning of net book value? Costless accumulated depreciation. Costless accumulated depreciation. Right. So we have to calculate the first year and the second year. Right. So we'll take the cost first, cost of the asset. Let me do it in thousands, 4,000. Cost of the assets, 4,000. Then you need to deduct the opening accumulated depreciation. Opening accumulated depreciation. In the reducing balance method, you are calculating the depreciation for the opening net book value. No? Once you deduct the opening accumulated depreciation, you will arrive at the opening net book value. Now in the first year, as and when you have purchased the asset, you haven't done any depreciation. So cost minus 0 depreciation, your opening net book value will be the same, 4,000. Then apply the depreciation percentage. So the depreciation percentage is 20%. And here you can clearly see asset was purchased on 1st of October. Asset was purchased on 1st of October. So in the first year, you know that our first year would be from 1st of April 2022 to 31st of March 2023. Next year, 1st of April 2023 to 31st of March 2024. So if you look at this year, halfway through, 1st of October only you have purchased. So you can depreciate only for 6 months. So the time period will be 6 months. So you can calculate the depreciation accordingly. 4,000 into 20% into 6 months. It will be 400. 400. Now I can move on to the second year. Right? Now second year opening accumulated depreciation is 400. So 4,000 minus 400 is 3,600. Now that 3,600 into 20%. You have to apply 20%. Now this full year you have been using. Then how much is the depreciation? 3,600 into 20%, 720. 720. Now they are not asking the 720. Yeah? Some people will get the answer and they will just say 720. No, that's not what they are asking. They are asking the net book value. How do we calculate the net book value? Cost less accumulated depreciation. So the cost of the asset is 4,000. Accumulated depreciation include 400 and 720. So 4,000 minus 400 minus 720. I'll be arriving at an answer of 2,880. So the answer would be the third one. So that 12 divided by 12 means, 12 divided by 12 means 12 months. So it's what I want to mean is it's 1 year. For the entire, you have to do the depreciation. Simply it's 1. Right. So the answer is 2880. Am I okay? The answer, are we clear? Right? Are we clear with the answer? You know that reduce imbalance method will be tested. In your part A, reduce imbalance method will be definitely tested. Okay. Okay, Dalamai. Right. I'll be moving on to the next part. මට මොනවා හරි ඔයගලන්ට issue එකක් තියෙනවා නම් message එකක් දාන්න නැත්නම් unmute කරලා කියන්න. Right? Okay. So we'll move on to the next question, next part. Right? Alto ඕඩනම් කියන්න, if you all want, you can take a screenshot. Right? Can't we get direct depreciation through reducing second year depreciation through opening net book value of the second year? Yeah, you can get, right? So from 3,600, if you deduct 720, you will get the answer. 3,600 minus 720, you will get the answer. That's the easy way. I just showed the equation, right? You can simply get the answer. 3,600 minus 720, right? So in which part of the module we have this diminishing balance method? Yeah, this was done at sole proprietor financials. If you have purchased virtual learning packages by me, right? I have done this at the sole proprietor financials, chapter 4, under the adjustments depreciation I have done, and I did questions as well. Right, we'll move on. Part 1.5. Sadika purchased goods with a list price of 600,000 on credit, subject to a 5% trade discount. You all know that we always take after trade discount. 600,000 with a 5% trade discount, you have to take 95%. We always take after trade discount. 600,000 into 95% is 570. Always keep remembering that trade discounts we have to take after. Thereafter sold for rupees 650,000 on credit. Thereafter sold for rupees 650,000 on credit. Right? You have sold it for 650. Creditors settled subject to a 10% cash discount. Creditors are being settled subject to a 10% discount. The net effect of these transactions shown in the accounting equation. Right. So let's try to calculate this answer. Asset, liabilities and equity. Let me show the calculation. Assets, liabilities and equity. So the first of all, what they say is you are purchasing 570 worth of items on credit. When you purchase, what will happen? Assets will increase the inventory and the liabilities will increase 570, the creditor. Assets will increase and the liabilities will increase. Then they say these items are sold on credit for 650. These items are sold on credit for 650. Then what will happen? Inventory will come down. Inventory will come down. But you will create a debtor. Debtor worth of 650. And as a result of this transaction, you will be recognizing a profit. 650 minus 570, you are recognizing a profit of 80. 80 rupee profit is there. Profit belongs to the equity. You will be recognizing a profit of 80 rupees. Inventory comes down, but the debtor comes up. right? You will be recognizing a profit of 80. Then what? Look at the next transaction. They say creditors were settled subject to a 10% cash discount. Now the creditor balance is 570. No, this has been settled subject to a 10% cash discount. Now 570 from that 10% is Lamai 57. This is the cash discount. No, after discount value 570 minus 57 is 513 is what you are going to pay in cash. Right, you are going to pay in cash. So then one side your cash will come down by 530 cash, right? And yes, when you are settling it in cash, your creditors will even come down by 570, 530, and you are getting a discount of 57. When as a result of the discount, your creditor will come down, and the discount is a benefit for you. It's another income. When you are receiving a discount from a creditor, it's another income. Other income called the discount received. Ne? You are receiving a discount, no? That's another income. Okay. Now, if you take the overall impact, 80 plus 57 is 137 here, equity. Your creditor liabilities will be 0. Then this will be netted off. 650 minus 513, 137. 137. So the answer, assets increased by 137, equity increased by 137. Assets increased by 137, equity increased by 137. Right? Okay. So let's see the answer. So if you look at the first one, assets increased by 137, equity increased by 137. Okay. Right. So we have done question number 1.5. Right. Okay, the Terunada. Okay. Please drop me a message if you got it. Right. If you need any clarifications, explanations, don't don't feel embarrassed or anything. Just drop me a message. Right. Good. ළමයි මාත් එක්ක connect වෙන්න unmute කරලා ප්‍රශ්න අහන්න chat එකේ දාන්න එතකොට තමයි මටත් තේරෙන්නේ ඔයගොල්ලොත් මාත් එක්ක ඉන්නවා කියලා, right? So keep that vibe. So can you explain it one more time? Very good, right? ළමයි 600 is the price of these items, but subject to a trade discount. You have to always take after trade discount. You are purchasing it on credit. Inventory goes up, creditor goes up. Then that inventory was sold. So when you are selling the inventory, inventory comes down and you are selling it on credit, no? So the debtor will increase. And as a result of this transaction, you are generating a profit by 570 worth of items sold at 650. So you got a profit of 80. And they are settling the entire creditor balance. They are settling the entire creditor balance 570. So the credit is coming down 570. But you are getting a 10% discount. Right, so that you don't have to settle entire 570, you are just settling only 530 cash payment. So the liability is coming down by 570, no? So the benefit is 57. You are receiving a discount. So your equity goes up by 57, right? Okay, we'll move on. Question number 1.6. Which of the following are considered as the fundamental qualitative characteristics of a financial information? Lamai, this can be tested. Qualitative characteristics, there are two types, fundamental and enhancing. There are two fundamental, relevance and faithful representation. Information should be relevant, it should be able to change a decision. Information shall be faithful, it should show the real economic situation. And enhancing, how are we going to increase the quality? It should be comparable, it should be verifiable, information shall be supplied on time, it should be understandable. So please remember these things, it will be tested. So the fundamental two are the faithful representation and relevance. Fourth one is the correct answer. Fourth one is the correct answer. Now, in the first lesson, we are discussing these things. We are discussing the qualitative characteristics. You know that I have in detail I have explained these things. Right. So this is basic theory one. Okay. We'll move on to the next question. Right. Look at this one, 1.7. Which of the following statements is correct in relation to application of accounting concepts? Right. Look at the first one. Items which are not material. Items which are not material for the decision making are not recognized. Items which are not material for the decision making are not recognized in the financial statements as per the materiality concept. Right? What do you think? True or false? First one. First one, true or false? Items which are not material, if it is not material, materiality concept says not to recognize. Recognize කරන්න එපා කියනවා. What do you think? True or false? So we got come on answer ළමයි උත්තර දෙන්න. Right, so we are getting the answer saying true අනික කට්ටියත් උත්තර දෙන්න ටක් ගාලා. What do you all think? True or false? Cool, අනික respond කරන්න. Right, true. So question 6 answer. 6 answer is the fourth one. Right, yeah, all are saying true. Right, false. So the answer is false. Lama materiality concept does not say not to recognize. No. And materiality concept does not say not to recognize. එහෙම වුණොත් මේක ප්‍රශ්නයක් වෙනවා. දැන් උදාහරණයක් විදිහට අපි හිතනවා okay, this calculator. This calculator is a very small equipment, right? So you cannot recognize the now materiality concept says calculator is a very small equipment, you just spend only maybe 5,000, right? They are saying not to recognize this as an asset. Okay, make asset එකක් විදිහට recognize කරන්න එපා, but how to recognize that as an expense? මේක account නොකරම ඉන්න කියලා කියන්නේ. තේරුණාද? Materiality concept does not say not to account, not to recognize. දැන් මේ බලන්න. මෙතන කියන්නේ not recognized in the financial statements. ඒක එහෙම බැලුවොත් එහෙම කට්ටිය account නොකර ඉඳී සමහර දේවල්. Material නෑ කියලා. It's not material, we should not account. Why? Materiality concept says that. No. Materiality concept does not say something like that. Right? Material items you have to recognize and show them separately. Even though those are immaterial, you have to recognize. May not be as an asset, but as an expense. Calculator එක අවුරුදු ගාණක් පාවිච්චි කරනවා. ඒක asset එකක් තමයි. ඒ උනාට මේක material නැති හන්ද expense කරනවා. You have to recognize that as an expense. Right? බලන්න දැන් ඔක්කොමල මට දුන්න උත්තරේ මේක true කියලා. ඒක true නේ, ඒක false. We'll see the second one. Disclosure concept says all the information shall be disclosed to the stakeholders. True or false? True or false? Disclosure concept says all the information shall be disclosed to the stakeholders. True or false? Right. So we have very few who are saying false. අගේර මම හිතන්නේ මියුට් වෙලා තියෙනවා ළමයි. මේ කතා කර ඉන්න එපා මේක ඉන්නකොට අගිනේ. Right? So most of the students are saying it's true. Answer is false. Again, disclosure concept says all the important information. ළමයි බලන්න හැලිච්ච වචනේ මොකද්ද? All the important information shall be disclosed, not all the information. ඔක්කොම තියෙන සබ්බ සකලමනාවම දෙන්න යන්න බෑ. එහෙම වුණොත් එimhe financial statement එකේ පිටු 1000ක් විතර. Disclosure concept does not say all the information shall be disclosed. No, all the material information, all the important information shall be disclosed. බලන්න එක වචනයක තියෙන වැදගත්කම. Right. ඒකෙන්ද ළමයි not all the information, all the material or the important information. So you have to read it carefully. So පළවෙනි දෙකම ගොඩක් අය true කිව්වට ඇත්තට මේ දෙක false. Look at the Third one, bonus payable are recognized as a liability even if there's no legal commitment to pay bonus. This recognition is based on substance over form. අපි දැන් business එකක් bonus ගෙවන්න ඕන කියලා නීතියක් නැහැනේ. Right? Whether there's a, even though there's no law, people recognize the liability, bonus payable. And it says that is because of the substance over form. True or false? On අන්තිමට කියන්න බලන්න true or false. Right? Yeah, that's true. Yeah, that's true. Last one is true. එහෙනම් මොකක්ද හරි උත්තරේ? C only. C only is the answer. C only is the answer. Okay? Right? Good. අපි යනවා ඊළඟ ප්‍රශ්නෙට. Question number 1.8. Right. Methuja's bank account showed an overdrawn balance of 90,000. However, the cash control account was different. Then they have given some transactions. They are asking the cash control account balance. Cash control account balance. It's a very easy one. Those who have followed my classes, they know we have the mechanism to do that. අපි බලමු කොහොමද කරන්න කියලා. So first of all, they say as per the bank statement, lamai. As per the bank statement, we have a negative balance of 90. Overdrawn balance, no? Overdrawn balance means negative. Then we need to do the adjustments. අපි ඒකට plus minus adjustments කරලා අපි එන්න හදන්නේ මොකටද? Cash control account balance. දැන් මේ cash control account එකේ balance එක තමයි හොයන්න හදන්නේ. That is what we are trying to search. So you don't have to prepare the reconciliation format. We just put the plus and minus. So OD balance is 90. Hari. Then අපි මේවට පාට පේනවා we are going from the statement to the cash control account. We'll take one by one items. Look at the first one. Standing order of loan installment 15,000. Standing order of loan installment. Right? Standing order of loan installment. You know the mechanism. මං කියලා දීලා තියෙනවා. Cash book, bank statement. Cash book, bank statement. First of all, you assume these two balances are equal. Right? Then you put the impact of the transaction. මෙතන මොකක්ද වෙලා තියෙන්නේ? Standing order එකක්. You have done a standing order payment. Cash book, they haven't accounted it. But bank, they have to honor it. So the bank has deducted the standing order. Bank has deducted the standing order. So the bank balance is lower. Right? So cash book, bank statement, initially equal. Then you put the transaction. Standing order payment. Bank balance is lower. Then see where to where you are going. From the bank statement to the cash book. From the bank statement to the cash book. From a lower end to a higher end, then you need to add. So I'm going to add the standing order payment 15. I'm going to add the standing order payment 15. What is the meaning of a direct debit? Direct debit means lamai direct payment. Bank one lamai debit karagani. For the bank, it's a liability, no? When they make a payment, they say debited. So for them, it's a debit. Direct debit. Right? Direct debit of 10,000. Cash book, bank statement. Cash book, bank statement. Initially equal. So because of the direct debit, bank balance is lower. Bank has deducted 10,000. Bank has deducted. Bank balance is lower. From where to where you are going? From the bank to the cash book. From the bank to the cash book. Then we need to add that 10 rupees. Okay. Direct remittance of 12. Direct remittance of 12. What is the meaning of direct remittance? Directly cash received to the bank. Cash book, bank statement. Directly you got cash to the bank. So the statement balance is high. Statement balance is high. From where to where you are going? From the bank to the cash book. From the bank to the cash book. Then we need to deduct. So I'm going to deduct direct remittance 12. Direct remittance 12. Okay. I hope you all are following, right? Look at the next one. Bank has erroneously credited 29 to the account. Bank has erroneously credited. We know that to the bank, it's a liability. So credited means they have added. Liability credit means liability goes up. So then bank has added. So cash book, bank statement. Bank has erroneously credited. So bank balance is high. Bank has erroneously credited. Bank balance is high. From where to where you are going? From the bank account to the cash book. So from a higher end to a lower end you are going. So then you need to deduct. You need to deduct 29. You need to deduct 29. Okay. Look at the next item. Unrealized deposits 17. Unrealized deposits 17. Cash book, bank statement. Cash book, bank statement. Unrealized deposit. Accountant has deposited the check. Cash book, accountant has deposited. So the cash book balance is high. But it has not realized to the bank yet. It has not realized to the bank yet. Cash book balance is high. Bank balance is lower. From where to where you are going? From the bank to the cash book. From the bank to the cash book. Then I need to add the unrealized payment. So I'm going to add the unrealized payment. Okay, I'm going to add the unrealized payment. Look at the next item. Last one, unpresented payments 30. Unpresented payments 30. Cash book, bank statement. Cash book, bank statement. Accountant has issued checks. Accountant has given some checks, so the cash book balance is lower. Cash book balance is lower. Statement balance is high. From where to where you are going? Because those are not presented to the bank yet. So from the bank to the cash book, then you need to deduct. So we are going to deduct 30. Right, now you can calculate the answer. Minus 90 plus 15 plus 10 minus 12 minus 29 plus 17 minus 30. I'm getting an answer minus 190. Minus 190. So 119,000 unfavorable balance. 119,000 unfavorable balance. You won't be getting a question with this type of a difficulty, but it's good. So how did you recognize that it goes from bank account to cash book? I'm not saying it goes from bank account to cash book. We are reconciling. Reconciling means you are trying to come to the cash book balance. If the bank book balance is lower, for you to, from the bank balance, bank statement balance to cash book balance, for you to come, you need to add. Right? Not that balances are going, we are trying to reconcile the balance. If the bank statement balance is higher than the cash book, for you to arrive at cash book balance, you need to deduct the balance. That is what we are doing. So in which chapter we study this? Right? I have a quick question. This is our chapter number 5. Right? Chapter number 5. Right? Okay. This is chapter number 5. Okay. Hurry. Lamai, we'll move on. Okay. So I got the same values, but when I calculated, I got 61,000. See, what are the, you might have made a plus minus difference. Right. Okay. So we got the answer 119,000. We'll move on to the next question. Right. Okay. Look at the next question. Suranvita Traders has generated a loss of 50,000 during the year. The opening assets were 50,000. During the year, owner has provided an additional capital in terms of a new equipment worth of 74,000. Monthly drawings 2,000. Closing assets 600,000. Closing liabilities 400,000. Calculate the opening liabilities. Calculate the opening liabilities. Right. So we are going to use the profit equation. You know that the profit is equal to your closing net assets minus opening net assets plus drawings minus additional capital. Your closing net assets means closing assets minus closing liabilities minus opening assets minus opening liabilities. Net asset means asset minus liabilities, no? Plus drawings minus additional capital, right, is equal to the profit. Now we'll try to solve this. Suranita Traders generated a loss. Loss means minus 50. Closing net assets. Closing assets 600. Closing assets 600. Closing liabilities 400. Opening assets 500. Opening assets 500. Opening liabilities we don't know. Drawings 2000 per month. 2000 per month. Monthly drawing. So plus 2 into 12 minus additional capital 74. Right, now I'm going to solve this. 600 minus 400 is 200 minus 500 minus x plus 2 into 12 is 24 plus 24 minus 74. 24 minus 74 is minus 50. Minus 50 is equal to minus 50 here. So 200 minus 500, you know the minus 500, minus into minus is plus x. Minus 50 is equal to minus 50. So here, if you just 200 minus 500 is minus 300 minus 350. So it will be minus 350 plus x equals minus 50. So minus 300 to this side is plus 350. Ultimately 300 is remaining as x. So 300 is the opening liabilities. 300,000 is the opening liabilities. Answer number 2 is the answer. Right? Point number 2 is the answer. Profit equation. Profit equation. Okay. Right. Okay, the issues තියනවාද මගෙන් අහන්න. Right? මේක තේරුණාද? ප්‍රශ්න තියනවාද?
Sir,
Profit
can you give
equation.
me the bank reconciliation again?
Bank reconciliation answer here 190.
Yes, sir.
Second one, unfavorable. Okay, right. Make okay the okay the Pradhan. Okay, right. Good. Right. Once again, I know certain things may be feeling okay, the paper will be this difficult. Don't worry, it won't be that difficult, but we'll try to find the areas. It can be tested. Right. So 300,000. We'll move on to the next question. Gimsara Traders has 100,000 due from Pahan Limited. Gimsara Traders has 100,000 due from Pahan Limited. At the same time, Gimsara Traders has a payable balance to Pahan of rupees 60,000. So Gimsara has a debtor called Pahan 100 rupees. At the same time, there's a creditor called Pahan for 60,000. That is what they say. So Gimsara has a debtor called Pahan 100,000. Same person or the company is there as a creditor 60,000. Pahan Limited has agreed to settle the receivable balance against the payable balance. So they have agreed to settle this net of these two, right? Net of these two. Then there will be remaining 40. No? When you set off 60 against 100, there will be remaining 40. And the balance to be settled in cash. This will be settled in cash. So they are going to pay cash. What is the relevant double entry for this transaction? What is the relevant double entry for this transaction? That is what they are asking. Okay. Right. If you look at this double entry lamai, we'll try to understand the double entry. One side, your creditor comes down. Your creditor comes down, debited to creditor 60,000. Debited to creditor 60,000. And you are getting cash. So debited to cash 40,000. And your debtor comes down, credited to debtor 100,000. Right? So the double entry, debited to creditor, those are the trade payables here, 60,000. Debited to cash 40, debited to trade receivables 100,000. So the correct answer would be the third one. Third one. Someone is asking profit equation. That is in our second lesson, accounting equation lamai profit equation. Right? ඒක මතකයිනේ. ඒක මතක නැත්තම් කියන මම අපව චුට්ටක් මතක් කරන්න. Profit equation එක. I gave you right මම දැන් ටිකකට කලින් දුන්නා. Okay the right? There will be a transaction given to you and you will be asked to calculate the provide the double entry that will be tested. ඔන්න අපිට එහෙනම් ඒකත් දැම්මා. Part C is the correct answer. Okay? Right. This is an easy one, not a difficult one. Huh? Right. So which party should we consider as? This question is asking from the Gimsara traders point of view. Right? Gimsara traders point of view. Okay? Right. So we'll move on to the next one. True or false question. Right? State whether the following statements are true or false. Right. We'll take the first one. Furniture sold on credit by Gayashi Furniture is recorded in the general journal. True or false? Right. True or false? Yeah. So we're getting the statement saying false, some are saying true, right? So what is the statement? Furniture sold. Furniture sold on credit by a furniture selling company. Gayashi Furniture is a furniture selling company. If you are a furniture selling company, when you are selling the furniture on credit, it's inventory. For furniture selling company, furniture is an inventory. It's an inventory. So when you are selling an inventory on credit, it should be recorded in the sales journal, not in the general journal. It will be recorded in the general journal if you have some other business. Then when you are selling a furniture, it's a property, plant and equipment. Then yes, general journal. But this is a furniture business, no? So the statement is false. In the meantime, someone has asked, මේකේදී අයි cash debit කරේ කියලා. තමයි cash එක debit කරේ පහන්ගෙන් ලක්ෂයක් ලැබෙන්න තිබුණානේ. පහන්ගෙන් ලක්ෂයක් ලැබෙන්න තිබුණා. 60ක් ගෙවන්න තිබුණා. ඒතකොට අපි 60ක් set off කරලා ඉතිරි 40 පහන්ගෙන් අපිට සල්ලි හම්බ වුණා. පහන්ගෙන් අපිට සල්ලි හම්බ වෙනවා. So it's a debit cash. Right? Okay. So the first statement is false. Look at the second one. Errors of principle means the violation of accounting concepts and accounting principles in recording a transaction. True or false? Hari මේක true or false කියන්න? Yeah, very good. Right? ටක් ගාලා කියන්නම. Yes, it's true. True. That's the meaning. Right? Accounting principles error means you are violating the accounting principles, accounting concepts. Look at the third one. As per the historical cost concepts, assets shall be always measured at their historical cost. What do you think? True or false? As per the historical cost concept, assets shall be always measured at historical cost. True or false? So some are saying true. Lamai. Historical cost concept is there, but you cannot say always the asset shall be measured at historical cost. There are some other bases we can use. Historical cost is a concept. If you are applying the historical cost concept, yes, you have to measure it at historical cost. Sometimes you might not apply historical cost. That's permitted. You'll be learning that in your future levels. So this is false. What is the critical word here? Always. You cannot say always you have to apply historical cost. You cannot say like that. Okay? Right. Look at 1.14. Enterprise resource planning is an integrated system which connects all the processes in the business into one system and one database. True or false? ERP මේ පාර චුට්ටක් බලාගෙන යන්න. ERP ගැන examples එහෙම SAP එක, Microsoft 3 Office 365, right? Interco. Yes, the answer is true. This is truth. Right? Drawing is an example for a nominal account. මේකට දෙන උත්තරේ බලමු. Sir, but they as per the historical cost. No. As per the historical cost concept, assets shall be always measured at their historical cost. Not all the assets. Though assets which are applying the historical cost only. Right? එතකොට හැම වෙලේම asset එකක් ඒ method එකට යන්න ඕනේ කියලා නෑ. There are some other bases. Right? ඒවා ඉගෙන ගන්න AAT 2-3 වලදී there are some other bases. You cannot say always you can have to apply the historical cost. Right? What do you think the last one? Drawing is an example for a nominal account. What do you think? Drawings is an example for a nominal account. මොකද හිතන්නේ? True or false? Drawings කියන එක nominal account එකක්ද? Or is it a real account? I hope you can remember. Ledger accounts can classify into 3 types: nominal accounts, real accounts, and the personal accounts. මොකද හිතන්නේ? Right? So we are saying we are getting the answer saying it's false. No, that's the criticality lamai. Drawings is a nominal account. It's kind of an exception. You know, generally the nominal accounts are the income and expenses. Income and expenses are the nominal accounts. But drawings is not an income, not an expense. It's a reduction of equity, and it's not a continuing account. ඒක සදාකාල අරන් යන account එකක් නෙවෙයි. ඒ අවුරුද්දේ drawings ටික අපි equity එකෙන් කෙලින්ම අඩු කරනවා. So we do not continue the drawings account. So therefore it's a nominal account. තේරුණානේ? Therefore it's a nominal account. So drawing is an example for nominal account is true. It's not false, it's true. Say account ටික එන ඒව ටික ඒ account ටික එනේව ටික පොඩ්ඩක් කියන්න පුළුවන්. මෙහෙම ළමයි accounts වර්ග තුනයි තියෙන්නේ. හරිද? Real accounts, nominal accounts, personal accounts. Real accounts මොනවාද? Assets, liabilities, equity. Nominal accounts, income and expenses. මම ඒකට පොඩි exception එකක් කිව්වා drawings. ඒක special එකනේ. Personal accounts කියන්නේ මොකද්ද? Debtor ledger, creditor ledger. Debtor ledger and the creditor ledger. Okay, right? හරි. Okay. අන්න ඒ ටිකත් අපි කතා කරා. හරියට මාක් කරගන්න ප්‍රශ්න පත්‍රයේ උත්තර ලියපු කට්ටිය right? මම ටිකක් අර අස්සේ මුල්ලෙන් තියෙන චූටි points උත් එහෙම මෙහෙන් දැම්මා. ඒවත් පොඩ්ඩක් බලන්න. Okay. We'll move on to the next set of questions. Write the answers for question number 1.16 to 1.2 in your answer booklet. The answer booklet එකේ උත්තර ටික ලියන්න කියලා කියනවා. හරිද? ඒකට දාගමුකෝ එකක්. හරි. Okay. Right. Look at the first one. Briefly explain the term professional behavior under the professional ethical principles. Professional behavior. Lamai, what is the meaning of professional behavior? So, in the meantime, I can prashna kalatina, sir, isn't drawing is an equity account. If it is an equity account, no. Drawing කියලා කියන්නේ the equity එකේ තියෙනවා අපි continue කරගෙන යන accounts. Capital එක වගේ එකක්. Capital කියලා කියන්නේ ඒක අපි continue කරගෙන යන එක. Drawing එක කියලා කියන්නේ අඩු කරනවනේ. අපි drawing කියලා අවුරුදු පතා account එක maintain කරන්නේ. මේ අවුරුදු drawing ටික ආවා equity එකෙන් අඩු කරලා ඉවර කරා. يعني ලබන අවුරුද්දට අනික අවුරුදු වලට අරන් යන්නේ. හැබැයි capital එක අරගෙන යනවා. So it's not a continuing account. You just create for an year, end of the year it will be deducted from your equity. Right? Okay. We'll come to the question here. They have been asking to define the professional behavior. Lamai. Professional behavior means we as members of a professional body, we need to understand we are members of a particular prestige professional body, and all our behaviors, our acts should not discredit our professional body. Our acts, our behavior should not be making an impact to that professional body. That is what it says in the professional behavior. So the question is 1.16. Members shall understand that they are part of a prestige, part of a prestige professional body. Therefore, they should not engage in, in any activity that discredits the profession. We should not do anything that will impact our profession. Is suspense account a nominal account? Suspense account you cannot put into any type of an account. You can consider that as a nominal account. That is the only thing that you can put. Only thing is suspense account is very temporary and you have to close it down. You do not continue the suspense accounts. So if somebody asks to put them into a category, yes, it would be a nominal account. Okay, so that is the first one, Lamai. Lamai, remember the 5 ethical principles, right? Integrity, objectivity, confidentiality, right? And the professional competence, professional behavior, and the due care. 6 ethical principles, Lamai, right? You have to remember. Look at the next one, 1.17. State 2 limitations of financial statements. State 2 limitations. What are the limitations? Financial information is only monetary. So there's no other qualitative information. Impact to the environment, impact to the society, we do not provide. It's only monetary information. And it's only historical information. Historical only. We do not provide any forecast to the future. What is going to happen in the future? We don't do any forecast. Historical only. And it does not adjust inflation. It does not adjust inflation. We do not adjust inflation. We do not adjust inflation. And it can be manipulated, subject to manipulations. Subject to manipulations. People can manipulate. Subject to manipulations. Subject to manipulations. And we do not recognize human capital. We do not recognize human capital. We do not recognize information. These are critical assets in a business. We do not recognize, right? So like that, Lamai, if you can at least write 2 limitations, that would be enough, right? There are number of other limitations. Financial statements are subject to biasness. Estimates are subject to biasness. And financial position is only a snapshot. Only a snapshot. So like that, there are so many limitations, right? But we have to just write only 2. Only 2. 2 limitations would be enough. Okay. Right. Then we'll move on to 1.18. 1.18. State 2 disadvantages of computerized accounting systems. What are the disadvantages? Right. When you are moving towards a computerized accounting system, Lamai, initial capital cost is higher. Initial capital cost is higher. Cost is high. And need technically skilled employees. Need technically skilled employees. And it would be complex. It would be complex, right? And human errors in recording might impact the accuracy. Sometimes when you are recording the transactions in the computerized system, you might make some blunders, right? It will impact the job market, impact to the job market, impact to the job market, right? Okay, I have written right around 5. What are the other, any other disadvantage, right? I have told you like 6 or 7 disadvantages. What are the other disadvantages? I have written like around 5. තමනත් දාන්න පුළුවන් අපිට. තියනවද? Right? දාන්න බලන්න ළමයි. I have written 5. You just have to write only 2. දෙකක් ඇති. Okay? Right. We'll move on to the next question. List 2 reasons on the importance of preparing the prime entry books. List 2 importance on of preparing the prime entry books. What are the importances of prime entry books? That is 1.19. One thing, to have a complete record, on transactions. Since transactions are recorded, in chronological order, that means the days order, it will be easy to refer. It will reduce the complexity in ledger posting. It will reduce the complexity in ledger posting, right? Increase the efficiency in accounting process. Easy to find errors and frauds. Okay, please write the answers. So I didn't see these kind of questions in any other past papers. You have to again go through the past papers because I actually took these questions from the past papers. මේ ප්‍රශ්න ටික ළමයි past papers වලින්ම තමයි ගත්තේ. Right? These are there. You have to look at the past 5 years. So the 10 past papers. තොර පහුගිය අවුරුදු 5 papers 10 තියෙන ප්‍රශ්නව තමයි මේ. Okay? Right. Okay the හරි මේ ටික okay ද බලන්න ළමයි. Right. මට මේ ටික දාගෙන okay නම් කියන්න. Sir, will we get any of these questions? Yes, that's why I'm putting. මේ ප්‍රශ්න ටිකෙන් එයිද එන නිසා ළමයි දාන්නේ. මේ ටික බලන්න යන්න. Right? ළමයි this is based on my analysis. I'm not saying all these things. But based on my predictions, at least few of these areas will be tested. ඉතින් මේවයින් කීපයක් වගේ අහයි කියලා හිතෙනවා. අහුවේ නැති වුණොත් කරන්න දෙයක් නැහැ. හරි ළමයි ලියාගත්තා නම් මට කියන්න ඕකේ කරන්න. V-learning ළමයි මේවා අපි කතා කරලා තියෙන්නේ. මේවා වාට වීඩියෝස් වල තියෙනවා. right physical class එකේ ඉගෙන ගන්න ළමයි මේවට මම notes දීලා තියෙනවා. right we have done these things. මේවා discuss කරලා තියෙනවා. right හරි okay නේ. right we'll move on to the last question. State 2 differences between financial accounting and management accounting. State 2 differences between financial accounting and management accounting. Right, let me just erase that one and let me put financial accounting, management accounting. the differences, right? If you take the stakeholders, lamai, financial accounting, both internal and external. Management accounting, internal only. Right? Then the format, financial accounting, we have a standard format, but here it's non-standard. Then the information, we are using the past information only, both past and forecast. Right? Then the legal requirement, yes, there's no legal requirement. Applicability of accounting standards, applicability of accounting standards, yes, no. Right? Objective, to assist decision makers on providing resources. To assist management to take short and long-term decisions. Right. Okay. Can you again check the answer of the bank reconciliation? Someone is asking regarding the bank reconciliation. Let me tell you the error you have made. You took that as plus 90. There's a OD balance. OD balance no puta. So if it is OD, you have to take that as minus 90. Ito balan uttere wage na. Kini dala tiyuna uttere වැරදි කියලා. මේකට හේතුව ඔයා අරගන්නකොට OD එක plus කියලා අරගත්තේ. OD එකක් නම් minus. Okay නේ? Right. හරි මේ ටික okayද? Right. ළමයි differences between financial and management accounting will be tested. Differences between financial and management accounting will be tested. මේක මට හිතෙනවා බොහෝ දුරට ටෙස්ට් වෙයි කියලා. Right? One of the ethical factors will be tested. It can be professional behavior or the professional competence. Professional behavior hari, competence hari, integrity hari test karai. A definitions ටික බලන්න යන්න. Limitations and disadvantages මෙන්න මේ තුන හරියටම ටෙස්ට් කරයි කියලා මට හිතාගන්න බෑ, but at least one will be tested. මේ තුනෙන් එකක් හරි ටෙස්ට් වෙයි. මම ගොඩක් හිතනවා මෙන්න මේකයි ටෙස්ට් වෙයි කියලා. Right? We never know. හරි? I'm not the one who's making the paper. හරි? Right. Okay මේක ලියාගත්තා නම් මට okay කියලා කියන්න. අපි part B එකට යමු. So that we can move on to the part B. Okay. Right. Okay, lamai. Now 40 marks done and dusted. So we are done with 40 marks. So that we have to move on to the next 40 marks. Right. Section B. We are moving towards section B. Lamai, question number 2. Right. Question number 2. You have been given. Right. Question number 2 has been given. They have been asking you to prepare the trial balance. You have been asked to prepare the trial balance. We'll read the question. Shivan started a sole prop business investing 3 million in cash. You can see that 3 million and 1.5 million motor vehicle 1st April 2023. Cash book info given, sales debtors loan and the payment details given. The closing balance is also given. Then they have given you the closing liabilities and assets, petty cash account. There were no stocks. Motor vehicles are depreciated at 20%. Very easy question. Trial balance is one of the easiest questions. You all know that. Right, let's draft the statement. So you are supposed to prepare the trial balance. And you will need around 40 accounts. So the T accounts are debtor, creditor, salary advance, and accrued electricity. Debtor, creditor, salary advance, and accrued electricity. Accrued electricity. Okay, so debit and the credit. Okay, this is the basic format. Someone is asking, can you explain the correction of errors lesson? Lama, in this model mock exam session, I won't be able to explain you the lesson, but we'll do a question definitely. But if you want to learn the lesson, please go and buy the V-Learning packs. Then you can have the theory coverage 100%, right? So that because if I were to teach you the correction of errors, Lama, it will take the entire session. No? So that would be the best way. Right. So we will start. Okay. Format එක දාගත්තද ළමයි? Okay නම් කියන්න. It's very easy one no. Okay නේ? ගාන හදනවා. Right. Okay, let's start. ළමයි starting with the first one. Shivan invested in the business 3 million in cash. Peterin පටන් ගමුකෝ 3 million in cash. Then what? Double entry. When you are investing debited to cash, debited to cash. So I'm not going to put the cash amount here because there are cash receipts, payments. I'll just go to the closing balance towards the end. So debited to cash, credited to capital. There's some other part of the capital, a vehicle investment. So I'll just put that as plus 3,000. Debited to cash, credited to capital. Right? Then if you look at the second part, they have invested a motor vehicle as well. Motor vehicle as well. Then what? Debited to motor vehicle, that I can straight away put, and credited to capital 1,005. Debited to motor vehicle, credited to capital 1,005. Okay, I'll just take the closing figure towards the end. Right? Debited to cash, credited to capital, debited to motor vehicle, credited to capital. Okay, look at the next transaction. Cash sales. Cash sales. Whenever there's a cash sale, what will happen? One side the cash will increase. Debited to cash. Cash will increase. On the other side, the sales will increase. To the sales, I'm going to add 2,500. Why I'm not going to put that as a credit balance? Because there will be a credit sale. I have to keep room for the credit sale. Debited, cash increased, sales increased. Cash increased and the sales increased. So done with that. Right. Look at the next item. Receipt from the debtor. When you are receiving cash from the debtor, right? I'll just put the some understanding for you all. Now my debtor is an asset. Asset, debit is a plus, credit is a minus. Credit is a liability. Debit is minus, credit is plus. So we'll keep those basics. You all know. Right. You are receiving cash from the debtor. When you receive cash from the debtor, cash will increase. Cash will increase. Debtor will come down. So debtor will be credited 3,500 as cash. Cash goes up, debtor comes down. Cash goes up, debtor comes down. Right. Look at the next one, Lamai. Loan received. Loan received. When you are receiving loan, what will happen? Cash goes up. Cash goes up. Loan will also increase. Cash will increase. Loan will also increase. Why I'm not putting that as a final figure? because there's a loan repayment. Loan repayment. Cash goes up, loan goes up. Okay. Right. Look at the next item. We'll move on to the payment side. Cash purchase. When you are paying, purchasing on cash, right? What will happen? One side cash will come down. Cash will be deducted. Cash comes down, but the purchase goes up. So we'll put that to the purchase. Purchase goes up plus 1005. Why I'm not going putting the final figure? There will be a credit purchase. Cash comes down, but the purchase goes up. Look at the next item. Payment to the creditor. When you are making a payment, cash comes down. When you are making a payment to the creditor, cash comes down and the creditor comes down. So creditor comes down means debit. 2200 will be debited. Cash. Cash comes down, creditor comes down. Okay. Okay. Look at the next item. Petty cash. When you are making a petty cash payment, what will happen? Cash comes down. Cash comes down. So the cash will be deducted and that will be added to the petty cash. That will be added to the petty cash. Since there's a petty cash account, I'm not going to prepare the petty cash account. So cash comes down and the petty cash goes up. But I'm not going to put the figure. End of the day, I'll be taking the closing figure. Cash comes down, but the petty cash goes up. Right? Since the T account is already there, nothing for us to worry. Right. Then look at the next one, electricity. I have told this one. If the question has given you an accrued adjustment or a prepaid adjustment or an advance adjustment, whenever there's a payment or whatever, right, you have to put that to those accrued account. That is the easy way. You have to put that to the accrued account. So electricity paid. What will happen? Electricity paid, cash comes down. Cash comes down. Cash comes down. And on the other side, accrued electricity, which is a liability, debit means minus, credit means plus. Let's say you are paying the electricity. Here we are assuming you are paying that accrued one, whatever the accrued one. Then what will happen? Your accrued electricity will also come down. Debited 50 rupees. Debited 50 rupees. Credited to cash, debited to accrued. 50 rupees. Okay. Right. Now, salary and wages. Salary and wages, there's a but salary advance. Salary advance. We have given a salary advance. We have given a salary advance. So whenever there's an advance or prepayment or whatever for the employees, we have given a salary advance. So whenever we make a payment, the easy way is to route that payment through that advance account. That's the easy way. So cash comes down, advance will be debited. So the salary advance will be debited 1000 as cash. Right? So this way is easy. If there's advance, prepayment or accrued account, whatever the cash payment, other entry shall be passed to those accounts. Then it will be easier for you. So credited to cash, debited to salary advance account. Right? Okay, next one. Vehicle repair, it's a normal expense. Cash comes down, repair expense goes up. Debited to vehicle repair 50. Vehicle repair expense goes up 50. Cash comes down, repair expense goes up. Loan repaid. You are going to repay the loan. You are going to prepay the loan 100. Of that 10 rupees interest. That's an expense, no? And 90 is a loan repayment. You are repaying the loan. So you are paying 100 rupee. Cash comes down 100. And loan will reduce by 90. Interest will increase by 10. So because of this loan repayment, cash comes down. Interest goes up. And the loan comes down by 90. So one side cash comes down, loan will be reduced by 90, interest will be increased by 10. Interest expense will be increased by 10 rupees. Cash comes down, loan comes down, interest goes up. Closing cash balance, now you can put 4575. Closing cash balance 4575. 4575. Right? 4575. Right? Easy. Now we have done with the cash book part lamai eti kivara kara. Right? Now we'll come to the closing balances. Closing balances. Debtor. They have given us the closing balances. Debtor 750. Debtor is an asset, no? Then how are we going to record the closing balance? Debtor is an asset. Debtor has a closing balance of 750. Then what is the double entry? Debited to debtor, this trial balance will be debited and the closing balance will be credited. Closing balance will be credited to the debtor account 750. 750. The closing balance. Okay. So debited to the debtor asset and the closing balance will be adjusted here. Closing balance will be adjusted here. Okay, it's very easy. Anyway, this closing balance will be continued as an asset, no? So closing balance credited, your debtor will be debited. Next one. Creditor 440. Creditor is a liability. Then what will happen? Creditor will be credited 440 to the trial balance. Closing balance will be debited 440. 440. Credited the liability in the trial balance and the relevant creditor account will be debited. It's simply you are passing a double entry. Next one, salary advance. What is the meaning of salary advance? Sometimes employees might ask for an advance from their next month's salary. Give us something. I have a bit of a problem. Give us something 40,000. Give us something as an advance from the next month's salary. So if we are giving a salary advance from the next month's salary, for us it's an asset. You can deduct that from the future expense now. When the next month you are paying them the salary, you can deduct that 40. So when we give a salary advance to the employee, it's an asset to the company. Right? So salary advance is an asset. Salary advance 40 is an asset. So debited and credited to the salary advance account as a closing balance 40. Closing balance 40. Really speaking, if you take this 1000 lamai, actual salary is 960, 40 was paid as an advance. That is what we have done. It's very easy. Accrued electricity 10 rupees. Sorry, salary advance is 50, no? Sorry, salary advance is 50. Sorry, 50. Right. Next one, accrued electricity. Accrued electricity. Accrued electricity. Right? If you take the accrued electricity lamai, it's a liability. Accrued electricity is a liability. The accrued electricity is 10 rupees. Then what is the double entry? Accrued electricity will be credited 10 rupees. And the accrued electricity account will be debited as a closing balance. As a closing balance. Okay. Right. Then we are done with these transactions. If you look at the petty cash account, from the petty cash account, we have spent for the traveling, welfare and stationery. So out of this 25,000, we have spent these items. Those are going to become my expense. Okay? So the traveling is an expense. Credited to petty cash, my petty cash comes down, traveling expense goes up. So you'll recognize the traveling expense. Petty cash comes down, traveling goes up. So the traveling expense is 15 rupees. 15 rupees. Then the welfare is 5 rupees. Welfare expense will be increased 5 rupees. Stationery 2 rupees. Stationery expense is 2 rupees. 2 rupees. Okay. Ultimately, your petty cash balance is 3 rupees. Your petty cash balance is 3 rupees. That you can put now petty cash balance, which is an asset. Petty cash is an asset. So you have a remaining cash balance of 3 rupees. Okay, right. Then the next item, depreciation. Motor vehicles are depreciated at 20%. So we can calculate the motor vehicle depreciation 1500 into 20%. Ne? So for the full year, you have to depreciate 300 rupees. So the depreciation expense debited 300. Accumulated depreciation for motor vehicle will be credited 300. Credited 300. Okay. Right, I'm done with all these adjustments. I just have to close the T accounts. When I close the electricity account, I'm getting the electricity expense 60 rupees. So my electricity expense is 60. Electricity expense 60. So accrued electricity account credited, electricity expense debited. Electricity expense debited 60. You can calculate the salary expense 950. So the salary is 950. Let me put the salary 950. 950. Take the creditor account, you will arrive at the credit purchase 2200 plus 440. 2640 is the credit purchase. 2640. So 1005 plus 2640 is 4140. Credit sale value 3500 plus 750, 4250 is the credit sale value. So the sale value is 4250. 2500 plus 4250, 6750. Sale is a credit figure. 6750. Capital credited 4500. Right. Loan balance 500 minus 90, 410. I think we took almost all the items. Now we can take the total. Am I? 4500, 6750, 410, 440, 10 and 300. I'm arriving at a balance of 12,410. I'll just put the total here. 4575 plus 1005 plus 4140 plus 3 plus 50 plus 10 plus 750 plus 15 plus 5 plus 2 plus 300 plus 60 plus 950. So the balance sheet gets, trial balance gets tallied at 12,410. Trial balance gets tallied at 12,410. 12,410. Okay, the 12,410. $12,410. හරි ළමයි මේ question එක okay නම් මට කියන්න ලියාගත්තද? Hello, okay with the question, just let me know. Someone is asking, is it compulsory to draw the T accounts? No, not compulsory, but it is kind of a foolproof method, no? Right. Okay. ළමයි මට දාන්න මේ ටික okayද කියලා. Correction of errors, good. Okay. Right. So you're done with correction of errors. Let's move on to next question, ළමයි. Manufacturing accounts. Right. Okay, look at the requirement. Prepare the manufacturing account. Prepare the manufacturing account for 10 marks. We'll start reading the question. Right. Henuka Manufacturers is engaged in manufacturing garments. Following information is provided for the year ended 31st of March. You have the purchase of raw materials, this and that information is given to you. Right. Additional information. Raw material, opening inventory and the work in progress at total cost is given to you. At total cost, not at the prime cost, my total cost. And the closing inventory is also given to you. You know, you have to adjust, add in the opening inventory, deduct in the closing inventory. Why are we adding? Because we are using that. Why are we deducting the closing? Because we are not using that. Factory building has a cost of 5 million. This is depreciated over a period of 20 years. 20 years. Factory machinery has a cost at the beginning of the year of rupees 2 million. And on 1st of October 2023, another factory machine was purchased at a cost of 1 million. Machines are depreciated at 20% per annum. Electricity and water, 80% applicable for factory and 50% of the rent. 50% of the rent. Right? So those are also given to you. Rent expense is applicable for the factory. Production workers are given an incentive of 50 per piece. Incentive 50 per piece. During the year, 5,000 pieces were completed. 5,000 pieces were completed. Production cost is transferred to a trading division, keeping a profit of 10%. Right. We'll draft the manufacturing account. This is Henuka Manufacturers. Henuka Manufacturers manufacturing account for the year ended 31st of March 2024 in yes, we can do the question in rupees thousands. You start with the direct materials. Opening.
Excuse me, sir.
Yes. Yes.
Sir, where's the production accounts present in the V-Learning?
Production account, that is coming under the chapter 4. Right? Chapter 4, second part. Production account. It's coming under the chapter 4. Chapter 4, that is the last part. Just check Lamai, right? Opening raw material inventory, and for that you are going to add the purchases, and there will be carriage inward, and you have the closing raw material inventory. You will arrive at the raw material consumption. Raw material consumption. Then you have the direct labor. Direct labor, keep some space, and you will arrive at the prime cost. Then you have the production overheads. Production overheads. So production overheads, you have to keep some space. Production overheads, keep some space. Then you will arrive at the production cost. Then you need to do the plus opening work in progress minus closing work in progress. Then you can calculate the production cost of completed items. Production cost of completed items. Then you will have the factory profit. And you will arrive at the transfer price. Okay. Right. So, okay. Please take the format. Right. Format take the manufacturing account. Once again, manufacturing accounts are not difficult. It's easy. Manufacturing accounts are not difficult, easy. Those who are going through the e-learning, chapter 4, there are two parts. One is Sole Prop, other one is manufacturing accounts. So I have done both mediums videos of past 8 papers I have done along with a very lengthy theory discussion. Right. Format එක දාගෙන මට okay කරන්න. එතකොට අපි ගාන හදන්න පටන් ගමු. ළමයි මේ formats ටිකට වෙනම short note එකක් හදාගන්න මම ඒක හැමදාමත් කියනවා. manufacturing account එකේ format එක, sole prop එකේ format එක, prime entry books වල formats ටික, bank rec එකක් හදන format එක. Right, you will have to have a small short note on all the formats. Right, format එක දාගෙන ඉවරයි නම් මට කියන්න. Okay. අනිකත් okayද? I have got messages from two. In your exam, don't spend unnecessary time on these formats. You have to do it very fast, very efficiently, because you are not going to get marks for the formats. But without the format, you cannot answer. Definitely yes, right? So you have to know when to speed up in your answer. Right, so we'll start. Look at the first one. We will be starting the question with the additional info. Opening raw material inventory 500, closing inventory 600. Then what do we need to do? Opening inventory added, closing inventory deducted. Very easy. Opening added, closing deducted. Work in progress. Opening 200, closing 100. Opening added, closing deducted. Why are we adding opening raw material? Because that last year closing is this year opening. No, that is the first thing that you are going to consume in the production process. This year closing balance you are going to consume in the next year. No, so production account is prepared to calculate the production cost of completed items in this year. So if you haven't utilized that raw materials, then you have to deduct. Work in progress means incompleted items. So opening work in progress means last year incompleted items that were completed during this year. No, that's why we are adding. Why are we deducting the closing? So whatever the incomplete items toward the year end will be completed in the next year. So that we have to remove. Right? I just explained the logic. Right. Then the next one, factory building has a cost of 5 million, depreciated over 20 years. Then the factory machinery. So I think we can do a small working on depreciation. Working on depreciation. So we got the building and we got the old machinery and the new machinery. These are the two items now. So we'll take the cost lamai. Cost of the building, what they say is 5 million. Old machines 2 million, new machine 1 million. 5 million, old machine 2 million, new machine 1 million. That's what they say, huh? Building 5 million, factory machinery at the beginning, those are the old machine 2 million, new machine 1 million. Then apply the depreciation percentage over the useful life. Building the useful life is 20 years. Old machines or the new machines, we have to apply the depreciation rate of 20%. 20%. And the period 1 year, old machines 1 year, but the new machines were purchased on 1st of October. 1st of October. So you have utilized only for 6 months. 6 months. Right. Now you can calculate the depreciation. Calculate the depreciation. 5,000 divided by 20, 250. 2,000 into 20%, 400. 1,000 into 20% into 6 months, 100 rupees. So machine depreciation is 500, building depreciation is 250. Depreciation is an overhead llama, it's not a direct cost. So we'll put factory building depreciation, that's belong to a production llama, that's also a production cost. Factory building you're utilizing for the production. And the machinery you're utilizing for the production. So the machinery depreciation 500. Machinery depreciation 500. You know that production cost can be divided into two as direct cost and the indirect cost. Direct costs are the items which are directly attributable, directly related to the product, like the main material, main laborers. All the other production related costs are the overheads or the indirect costs. Okay, right. So you're done with the adjustment lamai. So the second adjustment and the third adjustment done. Then they say electricity water 80%, rent 50% applicable for the factory. So we'll put that electricity 80%, water 80%, rent 50%. Okay, right. Then we'll do the calculation lamai. Electricity expense is 500, water 200, rent 500. So we'll just take our share. Ne? Others will be recognized in the admin expense. 500 into 80, 400. 200 into 80, 160. Then 500 into 50 is 250. You just have to take your share. Now this is the factory account, no? Factory manufacturing account, no? You just have to take your share of expenses, factory expenses. These are overheads, Lamai, not the direct costs. Right, we are done with up to the fourth point. Fifth one, production workers are given an incentive of 50 per piece and during their 5,000 pieces were completed. So that is a direct, you are giving a piece rate incentive to the direct production employees. That's a direct labor cost, right? So the production incentive, you are giving 50 into 5,000 pieces. Yeah, 50 into 5,000 is 250,000. We are doing the question in 1,000. I'll be taking that as 250. Since we are doing the question in 1,000. 250 is the incentive. So can you explain again how to get the depreciation as I locked out due to signal issue? Right. Depreciation, building has a cost of 5 million. I took that as 5,000. It should be depreciated over 20 years. So 5,000 divided by 20, 250. There are two machines. One is the old machine. You have been using it for the entire year. So machines are depreciated at 20%. So the old machine 2,002 million into 20%. But you purchase a new machine that was purchased on 1st of October. So 1st of October means you are utilized only for 6 months now. For the new machine, we are depreciating only 6 months. Okay. Right. So I think I have done this part now, the production incentive part. Yes. Finally, the factory is keeping a profit of 10%. So the factory profit is 10%. Factory profit is 10%. Right. So we have done all the adjustments. We have done all the adjustments and we have taken our balances. We'll move on to the trial balance given, info given. Purchase of raw materials 3,500. Purchase 3,500. Carriage inward 25. Carriage inward 25. Factory insurance 200. So that's an overhead. Factory, no? Factory insurance means it's a factory cost. Factory insurance 200. Factory insurance 200. Factory insurance 200. Direct wages 2000. Direct wages 2000. Direct wages 2000. Direct wages 2000. Factory manager salary 900. Factory manager salary. Factory manager salary 900. Factory manager salary 900. Electricity water rent done, rates 100. So they haven't mentioned whether it is factory or not, but we will assume it to be the factory rates because there's a factory building. There's a factory building, so the rates is 100. There's a factory building, so we can consider the rates are applicable for that building 100. Carriage outward. What is the meaning of carriage outward? Carriage outward means carriage means transportation cost. Transportation cost to take the items outside the business. You are taking them to the customer. Carriage outward means transportation cost of delivering or the distributing the items to the customer. That's a distribution cost. Carriage inward, items coming inside the premises. Raw material delivery cost. That's a manufacturing cost. Finished good to the customer, distribution. Because production cost deals with until you become a finished good. Once you become a finished good, it goes to the trading account. Office maintenance, that's not part of our expense. That's not a manufacturing cost. Okay, so we are done with this question, Lamai. Now we can possibly take the answer. So the raw material consumption comes to a value of 500, 3,500 plus 25 minus 600. 3425. Raw material consumption 3425. 2000 plus 250, 2250. So the prime cost $5,675. The depreciation overheads 250 plus 500 plus 400 plus 160 plus 250 plus 200 plus 900 plus 100. So I'm getting 2760 here. So the production cost 5675 plus 2760, 8435 plus 100, 8535. Apply 10%, 8535 into 10%, 854. So the transfer price 8535, 9389. Okay. 9389 is the manufacturing cost. Balan, okay. Lamai, okay, the manufacturing account. If you're okay, just drop a message Lamai, chat eකට දාන්න. Manufacturing account එක okay na. Very easy question na. I would say the easiest one. Manufacturing account is very easy. Okay. Not the difficult question. It's easy one.
So can you ask from the others that they that means me did they check me did they watch the V-learning package me in the production accounts?
ළමයි, let me check with the V-learning team. They're asking about the V-learning manufacturing accounts. As far as from my aspect, that was the last set of videos I have done. You all know that this time the V-learning, it was all fresh new videos. The last lesson for me to complete was the manufacturing accounts, and that has been done from my end. So as far as I know, those are being uploaded, right? So let me check. If ළමයි අනික බැලුවද නැද්ද මොකක්ද ඒකේ තත්ත්වය කියලා මට message එකක් දාන්න, right? Right, no worries, but from our end, my end ළමයි, I have done everything. දැන් ඉතින් videos ටික ඔක්කොම කරලා past papers උත් කරලා තියෙන්නේ. Can you කියන දාලා තියෙනවා මට අයින් වෙන්න කියලා, right? Okay, let me check with the V-learning team, right? I will check with the team, right? Okay, හරිද? Right. Actually, that was done very recently. Videos ටික ඇත්තටම ඉවර වුණේ maybe like around 1 week back, right? Okay, let's move on. අපි manufacturing account එක කරලා තියෙන්නේ. Right, okay, let's come to this question, very easy one. මේක නම් හරියම ලේසි ළමයි. හරිද? Right, okay, look here. You are given the impact of below 5 transactions to the accounting equation of a sole proprietorship. There were no drawings during the year. There were no drawings during the year. හරිද? Right, දැන් මම මේ transactions ටික ලියන්නේ නැහැ. ඔයගොල්ලොත් එක්ක අපි කතා කරනවා. හරිද? Right. We'll look at the first one. It's very easy one. හරිද? Very easy one. We'll look at the first one. PP increased by 1,000. Bank balance increased by 2,000. Equity increased by 3,000. Then what is the transaction? So what is the answer that you are supposed to write? Owner has invested a capital of rupees 3,000. Owner has invested a capital of rupees 3,000, of which rupees 2,000 in cash, rupees 1,000 rupees in property, plant and equipment. Right? So you need to write the first one. පළවෙනි එක කොහමද ලියන්නේ? Owner has invested. ලියන්න ඕනේද? ලියන්නත් ඕනේනේ. Right? Owner has invested rupees 3,000 as capital, of which rupees 2,000 in cash and rupees 1,000 in property, plant and equipment. Property, plant and equipment. Right. That is the first one. It's very easy. Look at the second one. Inventory increased by 500. Cash reduced by 200. Creditor increased by 300. Inventory increasing means you are purchasing inventory. No? 200 on cash, 300 on credit. It's very easy one. Second one. Inventory purchased at a value of 500, of which 200 on cash and 300 on credit. 200 on cash and 300 on credit. Right. It's very easy. Third one. Inventory reduced by 50. Equity reduced by 50. Inventory reduced by 50. Equity reduced by 50. What is that? Tell me what is the third transaction? තුන්වෙනි එක මොකක්ද කියන්නේ? Inventory reduced by 50. Equity reduced by 50. Tell me what is the answer? Right? Inventory reduced by 50. Equity reduced by 50. Quickly. කට්ටිය කියන ටක් ගාලා කියන්න. What is the answer? Cut again. Keep it in there. Right. Right. One has said it's a bad debt. It can't be a bad debt. If it is a bad debt, the debtor should reduce. Debtor adu wenna it's not a bad debt. Inventory nadu wela තියෙන්නේ. දැන් ඔක්කොමලා දාගෙන යනවා drawings කියලා. මේකේ ගානේ පැහැදිලිව කියනවා මොකද්ද? There were no drawings. බලන්න ඉතින් ගාන කියවන්නේ නේ ඉතින්. ඕකනේ බැරි. මේ ගානේ පැහැදිලිව ලියලා තියෙනවා. There were no drawings during the year. දේවල් ඔක්කොමලා drawings කියලා දාලා යනවා. You have to read the question. Then මොකද්ද? Right? So one is saying loss. Stock damages. Very good. It can be a stock damage. It can be a stock loss. It can be a stolen inventory. It can be a stock damage or a stolen inventory. You have to read the questions. Right. So the third one, damaged stock of rupees 50. Damaged stock of rupees 50. Right? Or you can say the inventory stolen or the stock loss. Right? Fourth one, inventory reduced by 200, debtors increased by 200, cash increased by 100, equity increased by 100. That means you are selling the inventory now. You are selling the inventory for both cash and credit. So you can write that one. Rupees 200 cost of inventory, rupees 200 cost of inventory has been sold for rupees 200 on credit and rupees 100 on cash. 200 cost of inventory has been sold for rupees 200 on credit and 100 on cash. One has said fraud. Someone has said depreciation on inventory. Inventory cannot be depreciated. Depreciation is applicable for property, plant and equipment. Inventory you cannot depreciate. Only the long-term assets like PP only depreciated. Inventory is a current asset, no? Inventory cannot be depreciated. Right. Look at the fifth one. PP reduced by 500, bank increased by 600, equity increased by 100. Tell me, what is this one? Fifth one. What is the transaction? PP reduced by 500, cash increased by 600, profit increased by 100. What is the transaction? Inventory comes down, cash goes up, profit goes up. What is the transaction? Yes, very good, very good. It's a disposal of a PP, right? PP has been sold. It's very good, right? So the fifth one, rupees 500 cost of property, plant and equipment. Cost of property, plant and equipment. Plant and equipment has been sold for rupees 600. Rupees 500 cost of an property, plant and equipment has been sold for rupees 600. Right. Okay. Right. This is an easy question, no? Neka api දැන් කරා for 5 marks. Right. Easy peasy. Okay. Right. Okay. Look at the part B of the paper. You have given the bank reconciliation question. You are supposed to adjust the cash control account for 3 marks, bank reconciliation for 2 marks. I'll read the question. Cash control account of a business indicates an overdrawn balance of 15,000. Following reasons were found. Bank has deducted the loan installment of 25,000 relating to the loan. It was not recorded. The loan installment included interest of 5,000. This 25,000 include this 5,000 interest. An amount of rupees 10,000 directly received to the bank as an interest income on 31st of March. This was not recorded. This was not recorded. Bank has erroneously debited. Bank has erroneously debited 5,000. A check of 75,000 issued on 29th March, not presented. A check of 120,000 deposited, not realized. Bank has credited 5,000 in the bank statement to correct the overcharged bank charges in the previous month. This was not recorded in the cash book. Right. So these are the items, Lamai. So let us prepare the adjusted cash book, adjusted cash control account, and the bank reconciliation. So the bank reconciliation starts with balance as per adjusted cash book or the cash control account. You do the plus, you do the minus, you will arrive at balance as per bank statement. And the opening balance, adjusted cash book has a OD balance, Lamai. So the opening balance is coming from the credit side of rupees 15,000. I believe I can do the question in thousands. Let me do the question in thousands. OD balance is 50. හරි. මේක ඕකේ නම් කියන්න මට. එතකොට ගාන හදන්න පටන් ගන්න පුළුවන්. ෆෝමැට් එක දාගෙන කියන්න. Please take the format. Right. ළමයි ඕකේද? හරි? Right. Okay. Right. So we'll start. Right. We'll start. Right. Look at the first adjustment. Bank has deducted the loan installment of 25 and it has not been recorded. Now my question clearly says this loan installment 25, 20 rupees for the loan, 5 rupees for the interest. So you'll recognize, ne? So when you're paying the loan installment and the interest, the cash book comes down. So you know that adjusted cash control, this is an asset. So the credit is minus, debit is plus, no? When you're making the loan payment, cash comes down. So 20 for the loan, 5 for the interest. So debited to loan, credited to cash, debited to interest, credited to cash. Very easy. Okay. Cash comes down because of the loan, because of the interest. Look at the next item. An amount of 10,000 directly received to the bank as an interest income not recorded. So when you're receiving the interest income, cash goes up. Cash goes up. So plus 10 as an interest income. Cash goes up because of this. These are very easy. Next one. Bank has erroneously debited 5,000 to the bank account. Lama, you know that when it comes to the reconciliation, we are preparing the reconciliation from the cash book, adjusted cash book to the bank statement. No? So here generally we adjust only 3 items. What are the 3 items? Bank errors, unrealized deposits and unpresented payments. In other words, timing differences and the bank errors. Now question clearly says bank has erroneously debited 5,000. We know that to the bank, this bank, the current account for them is a liability, no? So liability credited means liability increasing. Liability debited means liability decreasing. Therefore, now they have erroneously debited means they have deducted. Then what? How are we going to adjust? Right? So you know in the reconciliation we use the technique. So the cash book, bank statement. Cash book, bank statement. Initially we assume things to be equal. Bank has erroneously debited means liability is getting reduced. So the bank balance is lower. Bank has erroneously debited. Bank is 5,000 rupee lower. Bank has erroneously debited 5,000. Right? Then from where to where you are going? From where to where you are going? From the adjusted cash control book to the bank statement. Bank has erroneously debited. Bank has erroneously deducted. That's wrong. In the reconciliations, we are not going to correct. We are trying to show the error. From the cash book to the statement, we are going. So from the cash book, that is where we are starting. From the cash book, we are going to the statement. So we have to deduct. So we will deduct the bank error. Bank error 5,000. Bank error will be deducted 5,000. Bank error will be deducted 5,000. Okay. Look at the next item. A check of rupees 75,000 issued was not presented for the payment. How are we going to adjust that? Once again, unpresented payment, you have to adjust it in the reconciliation. Unpresented payment. How are we going to adjust? Cash book, bank statement. Cash book, bank statement. Initially, you assume it to be equal. Now, the accountant has made some payments. When you are making a payment, when you are issuing a check for a payment, balance comes down. So the cash book balance is lower. But it has not been presented to the bank yet. It has not been presented to the bank yet. From where to where you are going? From the cash book to the bank statement. From the cash book to the statement. So from the cash book to the statement, when you're going, you have to add. You have to add. Right? So in the reconciliation, you have to add the unpresented payment. So we are going to add unpresented payments, which is 75. 75 is being added. Okay, unpresented payments added. Okay, right. Look at the next item. 120 check was deposited but was not realized. Check deposited, not realized. So how are we going to adjust? Once again, unrealized is a timing difference. Cash book, bank statement. Those are going to the rec. Cash book, bank statement. Initially assume it to be equal. You have deposited the check. So in the cash book, when you deposit the check, you increase the balance. So cash book balance is high. It has not been realized to the bank yet. It has not come to the bank yet. So the bank statement balance is lower. From where to where you are going? From the cash book to the statement. From the higher balance to the lower balance. Then you need to deduct. So we will deduct the unrealized deposit minus 120. Minus 120. Okay. Right. Look at the last item. Bank has credited 5,000 in the bank statement to correct the overcharged bank charges in a previous month. This was not recorded in the cash book. Lamai, in the previous month, bank has deducted the bank charge. Erroneously, they have deducted. And we have also deducted that bank charge in our cash book because we don't know that's an error. No? So bank has deducted erroneously. We have also deducted. Now in this time that error bank has credited, bank has added. So we also need to add that to our cash book. So we'll add that to the cash book Lamai. This is a bank charge 5,000. So I am adding that bank charge. So bank has done an error and we have done the same error because we are just picking those items from the statement. Since bank has corrected, we even need to correct. Right, that's it. Now I can close down. So I'm going to close down the P account here. I'll just take the total. So 15 plus 20 plus 5 is 40. 40 minus 15, 25. So 25, the closing balance, you can see this is an OD balance. I have told you ODs shall be recognized as minus 75 minus 125. Then how much is the balance as per the bank statement? Minus 25 plus 75 minus 125. So you'll be getting the answer minus 75. There's a OD balance of 75. OD balance of 75. So how to find it value is OD or not? Now my cash book is an asset, no? So if an asset, you should have a debit balance as a opening balance. Now here question clearly says opening balance is OD, so it came from a credit balance. This closing balance will continue as a credit balance, no? Then it's an OD. If it would be an asset, my closing balance should come from this side. Then only you will have a debit opening balance. Okay? Right. හරි නේද? තමයි මේක ඕකේද? Bank rec එක we did 2 questions today. That will be more than enough. හත් කියන්නකෝ ඕකේද කියලා. Okay? Right. So we'll move on to the next question. Okay, right. Okay, question number 5 part A. This is from the correction of errors, Lamai. Right, you are supposed to provide the journal entries to rectify the errors for 6 marks. Calculate the corrected net profit for 2 marks. We'll read from the beginning. Izzat Traders is a business engaged in selling electronic items. The trial balance as at 31st of March prepared by an account executive was not agreed. Draft financials were prepared and the draft loss is 120,000. Loss 120,000. You recognize a loss of 120,000. Following errors were identified subsequently. Rent expense 20 was recorded as rent income. This has been correctly recorded in the cash book. Owner has drawn 50,000 worth of electronic items and this was recorded as a reduction of sales and as a cash reduction. That is also wrong. Electronic items means inventory. Owner has drawn inventory. Payment of electricity expense 10 rupees has been recorded only in the cash book. Only in the cash book. Right? Okay. Fourth one. Total of the purchase return journal was overstated by 8,000. Bad debt recovered of rupees 20 has been deducted from the debtor. Cash receipt was properly accounted. Telephone expenses 15,000 debited twice to the telephone expense account, while corresponding credit entry was correctly recorded. Right. Can you explain with using T accounts? Can you let me know what do we need to explain? Someone is asking, does the statement of comprehensive income means income statement? Yes, both are the same. Okay, we'll start preparing this Lamai. So you are supposed to write the journal entries. So I'm going to prepare a general journal. I'm going to prepare a general journal. And I need to prepare the profit statement. So the profit statement, I have the draft profit, which is a loss. Draft profit is a loss. I believe I can do the question in thousands. Let me do the question in thousands. Debit and the credit. So loss of 120. There's a loss of 120. Always remember in the profit statement, Lamai, we have to take only the income and expenses. And in the profit, debits are minuses, credits are plus. Right? So income or an expense debit means, Lamai, your profit is coming down. Income debit, income lesser, profit is coming down. Expense debit, expense goes up, profit is coming down. Income credit, income increase, profit increase. Expense credit, expense decrease, profit will increase. So you have to apply that simple logic. Okay. ළමයි formats එක දාගෙන මට okay නම් කියන්න. It's a very simple format. Okay ද? Okay. Right. Okay. So let's start. Let's start with the first one. Right. Look at the first one, ළමයි. Rent expense of 20,000 recognized as rent income, but this has been correctly recorded in the cash book. Right. Now look here. Lamai, this is a rent expense, no? Ideally, how you should record the correct entry? Debited to rent expense 20, credited to cash 20. But they have recorded, it has been recorded as a rent income. What is the wrong entry they have passed? Right, they have recognized it as a rent income. So credited to rent income 20. And they saying cash has been properly recorded. So credited to cash 20. Now you can see there's nothing wrong with the cash. Cash part is okay. What should be the correction entry? What should be the correction entry? Yes, one side I have to recognize the rent expense now. Debited to rent expense, I have to record 20. I need to remove this rent income erroneously recorded. It has been credited to remove, I have to debit. So debited to rent income 20. Then what else? There's nothing, no other entry I have to put. Then everything goes to the suspense. Credited to suspense 40 rupees. Credited to suspense 40 rupees. Credited to suspense 40 rupees. Okay. Right. Shall we write the entry, Lamai? Right. In the general journal, we'll write the entry. And okay, I'll write the double entry. Starting with the first one. Rent expense debit 20, rent income debit 20, suspense accounts gets credited 40. Suspense accounts gets credited 40. So this is a clerical error. Ne? We can say correcting clerical error. Clerical error means you get messed up with the names. Clerical error on rent. Right. Now you can see the rent income and expense, both are income and expenses. Debited means rent expense goes up, profit comes down. Income debited means income comes down, profit comes down. So we'll adjust that to the profit statement. Rent minus 40. Minus 40. I'm taking both of them together. Okay. මේක ඕකේද තේරුණාද? ළමයි මාත් එක්කම ලියාගෙන යන්න පුළුවන් නේද? I hope you all are also writing with me. Right? Really speaking, we have the scheduled time for the seminar is only 7 to 9, right? So the time is over now. But anyway, someone is asking, sir, in the questions, how to write the narrations? Very easy. You just start with the term correcting. Then you write the type of the error. Then relate that to the particular item. Correcting clerical error on rent. Or you always start with the correcting. Then the type of the error. Then the particular item. Simple as that. Okay. Right. So we are done with the first part, first question, first adjustment. Shall I move on to the second one? Lama, is it okay? Arneda? So preparing drafted profit, can you use the suspense account? No. For the draft profit, Lama, suspense account is not related. Suspense account is a separate requirement. In this question, you are not asking to prepare a suspense account, no? So suspense account is prepared now. Like this, when you have adjustment on suspense account, you are going to adjust that. For the draft profit, suspense account is not related. Right, we'll move on to the second one. Right? Okay, we'll move on to the second one. Owner has drawn 50,000 worth of electronic items and it is recorded as a reduction of sales and cash reduction. Right, owner is withdrawing 50,000 worth of items. What is the correction entry? Correct entry. So it's a drawing. So it should be debited to drawings 50. And it's owner is drawing the items, the purchase items. It should be credited from the purchases. Credited to purchases, or in other words, you can say the cost of sale 50. Right? So the correct entry would be debited to drawings, credited to purchases. We don't maintain an inventory account now. In the double entry mechanism, inventory is there only for the year end only. Year end you create, beginning of the year, you actually charge it back to the P&L. Right? The wrong entry, what they have passed. They have recorded as a reduction of sales. What they have done is debited to sales and credited to cash. That's wrong. Credited to cash. This is wrong. So what should be the correction entry? So one thing, the correction entry, we have to debit the drawing and we need to credit the purchase. So we need to pass the correct entry. Then we need to reverse the wrong entry. Then what? Debited to cash, credited to sales. Clear? So we need to put the correct entry and we need to reverse the wrong entry. Right. So we'll pass the double entry. Drawings debited 50. Then the purchases credited 50. Then the cash debited 50. Sales credited 50. Narration correcting. This is a principal error. Correcting principal error on drawings. 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 Right. Then look here. Drawing is not an income or an expense. Purchases, yes. Cash, no. Sales, yes. So both purchases and sales are getting credited. So altogether it's 100. Right? So then we'll put purchase and sales. Credited means plus. In total, it's 100. 250 means 100. Right? Okay. Right. We are done with the second one. We'll move on to the third one. Payment of electricity expense of 10 has been recorded only in the cash book. If it is payment of an electricity, the correct entry would have been debited to electricity, credited to cash. This is the correct entry. What is the wrong entry? What they have recognized is only they have credited the cash. They haven't put the electricity expense. Right? So you can see cash part is okay. So what would be the correction entry? We need to recognize the electricity, debited to electricity 10 rupees. There's nothing wrong with any other thing. Credited to suspense account 10 rupees. Credited to suspense account 10 rupees. Debited to electricity, credited to suspense 10 rupees. So we'll record that. So the third one, electricity is getting debited 10 rupees. Suspense accounts gets credited 10 rupees. I mean, always remember suspense is not an income or expense or asset or liability or equity. It's something we temporarily create because account is not getting balanced. Right. So we'll write the narration. This is an omission. You have missed that. Correcting omission error on electricity. Right. Electricity is an expense. Debit means minus. Ne? Expense increase, profit comes down. Electricity minus 10. Okay. Right. So 3 items we have completed so far. Okay. 3 items we have completed. Right. Up to this point, okay. Are you all okay up to this point? Up to these 3 points of correction of errors? I know correction of errors is an area sometimes you struggle. Okay, the correction of errors up to these 3 adjustments. Am I okay up to this point? Yes or no? Please drop a message if you have any question. Okay. Right. Okay, let me move on, Lamai. We'll move on to the next part. Right, look here. So under the first adjustment, total of the purchase return. Total of the purchase return day book was been overstated by 8,000. How do we recognize the purchase return? Purchase return, Lamai. Purchase return. How do we recognize when you are returning the items back to the creditor? What you do is, Lamai, debited to creditor. Creditor comes down, debited to creditor, credited to purchase return. Now you have overstated. You have put overly 8,000 on the creditor and on the purchase return. You have put over amount, overstated. Then how to correct? To reduce the creditor, then what we need to do, right? You have debited the creditor 8,000. To correct that, what you need to do, Lamai? Credited the creditor 8,000. And to remove the purchase return, we have to debit the purchase return 8,000. So purchase return, what is the entry? Creditor should come down, debited to creditor. Purchases coming down, credited to purchase return. You have put it an excessive amount, overstated. So in order to correct that, we need to reverse this, right? So shall we pass double entry? Fourth one, your purchase return gets debited 8,000. Creditors will be credited 8,000. This is a commission error. Correcting commission error on purchase return. Purchase return. Correcting commission error on purchase return. So purchase return is an income expense account. It's an expense account. So we will debit means minus. We'll record that purchase return ₹8. Purchase return ₹8. Okay. So you're done up to the 8th point. නටවෙනි එකත් අපි දැම්මා. Right. ළමයි මේ ටික ඕකේ නේද? Please be kind enough to respond. Okay, yes, right? Okay. So let's move on to the next part of the question, Lamai. Right. So you've done up to 4 points. The 5th one, bad debt recovered of ₹20. Bad debt recovered of ₹20 has been deducted from the debtor. The cash receipt was properly recorded. Lamai, if it is a bad debt recovery, that means you have recovered the bad debt. The correct entry would have been debited to cash. You are getting cash, and bad debt expense should come down. Credited to bad debt expense. What is the wrong entry they have passed? They have debited the cash. That's no issue. But they have credited the debtor. That's wrong. You have already deducted the bad debtor at the bad debt level. No? So this is the wrong entry they have passed. You can see nothing wrong with the cash. It should be recorded as credited to bad debt, but recorded to credited to debtor. What is the correction entry then? We have to correct the bad debt expense, and in order to adjust the debtor, we have to debit the debtor. In order to correct this error, we need to debit the debtor. Right. So the correction entry goes like this. The adjustment item number 5. Your debtor will be debited ₹20 and the bad debt expense will be credited ₹20. So this is correcting, this is once again a principal error, correcting principal error on bad debt. Right. Now my bad debt expense gets credited. Expense credited means my expense comes down and profit goes up. So the bad debt recovery ₹20. Bad debt recovery ₹20. Bad debt recovery ₹20. Okay. Right. Last one, we have come to the last part of the discussion on this correction of errors. Right. The sixth item. Right. Okay, look at the sixth item, Lamai. Telephone expenses 15,000 debited twice in the telephone expense account. Right. What is the correct entry for a telephone? Debited to telephone 15, credited to cash. That is the correct entry. So what is the wrong entry they have done? They have debited the telephone twice. They have debited the telephone 30 rupees. But they have correctly credited the cash only 50. Cash okay, nothing wrong. But telephone they have doubled. Then what is the correction entry? Debit and the credit. So telephone we have to this. What we need is 15. We got 30. So we have reduced now. Credited to telephone 15. We already have 30. What we need is 15. So we are going to reduce 15. Remaining balance goes to the suspense account. Remaining balance goes to the suspense account. Okay. Right. So we'll record that. Adjustment number 6 here. Adjustment number 6. Your suspense account gets debited 15 and the telephone expense gets credited 50. So this is correcting duplication error on telephone. Correcting duplication error on telephone. Telephone expense getting credited, that means your expense comes down, so it will be added. So you can correct the corrected profit now. So the corrected profit is still a loss of 43. Right. Okay, Lamai, please take the answers. Medic okay the Kian Lamai. Right, thank you. Right, medic okay the Terunada okay the right. Correction of errors okay the Lamai, if you have even you have understood this part, you have to go through the theories, right? Theory balanna, right? The types of the errors, how are you going to prepare the suspense account? That is much needed. Hari, Anik Lamai, okay the if you're okay, please drop me a message. Okay. Right. Okay. So we have completed the correction of errors as well. Right. Okay. Question number 5, part B. Right. Chandrakumar Traders is in the business of buying and selling food items. Credit purchase of the month of November is given to you. And the details are given to you. You are supposed to prepare the purchase journal. It's very easy for 2 marks. So we just will prepare the purchase journal, Lamai. Very easy question. You are supposed to prepare the purchase journal. You know the format: date, invoice number, description, and the amount. Simply this is the format, right? Date, invoice number, description, and the amount. Okay. We'll just record the information, Lamai. It's very easy. On can't see the date. I think it's 11 of 11 or something like this. Invoice number is 45 and the supply is Mihaly. And what we are purchasing is dal 500 kg at 300. So we have to always take after trade discount. So the amount will be 500 kg and at 300 unit price with a trade discount. So you have to take 90%. You have to take 90%. 500 into 300 into 90% after trade discount. It's always after trade discount. 135,000. Next one, 20th November, 46 Sandaru, 1000 kg at a price of 250. Trade discount is 5%. Then you have to take 95%. So 1000 into 250 into 95%, 237,500. So the total 372,500. 372,500. Okay, 372,500. Right. Okay. Hari, lamai. Make okay the right. Okay the good. Right. Lamai, just go through this prime entry books part. At least 5 marks question will be there. Hari, okay. Lamai, okay කරන්න දැන් අපි part B එකත් ඉවර කරා. Right? හරි, මේක okay ද? දාගත්ත නේද? මට message එකක් දාලා මෙතන. Actively respond කරන්න. Right? Ko. හරි නේද? Right. Okay. Lamai, so from my end now, in this model paper, we have discussed part A entirely, and I explained part B entirely, and now we have come to the part C, right? Hari, මටත් මහන්සි දැන් part C එක මොකද්ද කරන්නේ? Are we going to discuss? Yes or no? Part C solve prop question. No responses. Only one is saying yes, so others are saying no. එහෙමද? If you really want it, just drop a message. Otherwise, I alone can't do this, no? Right. අවශ්‍ය නම් ටක් ගාලා message එක දාන්න. Right? Right. Keep that motivation. I mean, අපිටත් මහන්සි, but still for you all we are doing, no? Right? So, really speaking, my time is over now. Right? I should have stopped by 9, but I'm still doing for you all. Okay? Right. So we'll try to finish off the paper, Lamai, with section C. You got 20 marks question on the sole prop. Right, we'll see. Right. We'll read the requirement. You are supposed to prepare the statement of comprehensive income and the financial position for 20 marks. Read from the beginning. Sehansa Traders is a sole prop. Trial balance 31st of March is given to you. We got the land building, office equipment, accumulated depreciation, inventory purchase sales. And this is interesting. You have an opening provision on doubtful debts. This has not been tested so far. Opening balance of a doubtful debt. Others are normal, right? Okay. Then closing inventory was valued at 4,000. Office equipment costing 500 was purchased on 1st October 2023 through a loan at 10%. And it was not recorded in the books of accounts. So the loan is not recorded, equipment is not recorded. Depreciation, building 5%, office equipment 20%. The management decided to write off 500 receivable from Papani as a bad debt. For the remaining balance, doubtful debt provision of 10% needed. Bills payable and prepaid, accrued electricity 200, prepaid water 100. Insurance applicable for the 2024 calendar year. Calendar year means like 1st of Jan to 31st of December. During the year, owner has withdrawn 500 worth of items from the business. However, this was not recorded. Okay. Right, so we will draft the format. This is Sehansa Traders. Statement of comprehensive income. For the year ended 31st of March 2024. And figures are in thousands, I guess. Yeah, sorry. It has not been mentioned. Figures are in thousands. Huh? Sorry, figures are in thousands. Rupees in thousands. Okay. So you start with the sales and you have the cost of sales, opening inventory, purchase, give some space, closing inventory, then the gross profit, other income, distribution expenses, then admin expenses, then you got the finance expenses, you got the other expenses, and the net profit. Right. Sehansa Traders, statement of financial position, as at 31st of March 2024, figures are in rupees thousands. Then you have the non-current assets. We got land, building, and office equipment. Land, building, office equipment. Then you got the current assets, inventory, trade receivables, minus provision for doubtful debts, prepayment, cash, total assets. Then you have the capital, so that we add the profit and we deduct the drawings. Then the non-current liabilities, we have the loans, current liabilities, trade payables, accrued expenses, right? Cost, accumulated depreciation, net book value, right? Okay, please take the format and let me know if you have taken down the format. Format එක දාගෙන කියන්න ළමයි. Okay. හරිද ළමයි අනික් අයත් format එක දාගත්තා නම් කියන්න. Okay. Good. Right. Good. Good. Very good. Right. Let's start, ළමයි. Let's start. Don't worry, it's not a difficult question. Nah? So all prop is easy. If you arrange them in the difficulty order, I would say correction of errors would be a little difficult, right? And solve prop is not a difficult thing. Right, let's start. It's very easy. Closing inventory. Lamai, closing inventory, what is the double entry? Closing inventory means unsold inventory at the year end. Now, there are certain inventories, you're purchasing the items, yes, you are selling those items. Certain items you are not in a position to sell. So towards the year end, some part of the items will remain unsold. You are not going to sell the entire inventory, no, there will be an unsold inventory. So then that unsold inventory, we have to remove that from this purchase, no? Because here we assume those as cost of sale, no? So we have to remove that. So closing inventory, we have to remove minus 4,000 credited to cost of sale. Your inventory is going to bring cash in the next year. That's an asset. So debited to inventory 4,000. Debited to inventory, credited to cost of sales. Debited to inventory, credited to cost of sales. Right? Look at the next one. Office equipment of rupees 500 purchased on 1st of October through a loan of 10%. So it has not been recorded. Then what we need to do? Office equipment 500. So one side when you purchase the office equipment, it should increase now. Office equipment should increase by 500. So we have to wait, there will be an opening balance now. Plus office equipment 500. On the other side, loans are increasing now. So I'm going to add 500 to the loans. Equipment I added 500, loan I added 500. Right? Equipment I added 500, loan I added 500. Okay. And the question clearly says loan has an interest of 10%. So we'll calculate the interest. If you haven't recognized the loan, that means you haven't recognized the interest. So the workings, we'll calculate the working number 1 on loan interest. So the loan balance is 500. Interest rate is 10%. Period 6 months, no? 1st of October to 31st of March is 6 months. So the interest 500 into 10% into 6 months, 25. 25. So you know the double entry, it's an expense, debited to interest expense. My interest expense goes up. And it's something payable. Interest, even though you haven't paid it, it's a liability you have to pay. Credited to interest payable. Debited to interest expense, credited to interest payable. So you have taken a loan, Lamai, and you have purchased an equipment. You have neither recognized the equipment nor the loan. So we recognize the loan and we have to recognize the interest for 6 months. That is what we have done here. Right? So we'll recognize under the finance expenses loan interest 25, and I'm going to recognize that as a liability as interest payable. Interest payable 25. Interest payable 25. Interest payable 25. Okay. Right. Remember, this new equipment you purchase on 1st of October, you have to depreciate for 6 months. Huh? Depreciation you have to remember. Right. So you've done the 2 adjustments. Third adjustment is on depreciation, Lamai, building and office equipment. So we can do the depreciation adjustment. So we'll do that. Let me do a small calculation on that. Depreciation. I have to take separately the building, old office equipment. Let me put that as old office equipment and the new office equipment. Okay. So we'll take the cost, Lamai. Building has a cost of 3,500, office equipment 2,500. 3,500, 2,500. New office equipment is 500 and it was not recorded. Now apply the depreciation rates. Building 5%, office equipment 20%. Even for the new office equipment 20%. Then the period 1 year, 1 year, this one is only 6 months. So the depreciation calculation 3,500 into 5%, 175. 2,500 into 20%, 500. 500 into 20% into 6 months, 50. So in total 550. So the depreciation calculations comes to a figure 175 for building, for the equipment 550. For the equipment 550. Okay. Right. All right. Shall we record this? Okay, the depreciation. Good. Okay. Right. I'm going to record this now. Depreciation is an expense. So building depreciation is an admin expense. Building depreciation. debited to building depreciation, credited to accumulated depreciation. I'm going to edit here plus 175. Office equipment depreciation is an expense. Office equipment depreciation is an expense, 550. And I'm going to edit that to the accumulated depreciation plus 550. Debited to depreciation, credited to accumulated depreciation. හරිද ළමයි ඔන්න depreciation adjustment එක කරා. Debited to depreciation, credited to accumulated depreciation. Okay. Right. හරි නේද ළමයි? මෙතෙන් වෙනකල් ඕකේද? Right? We have done around 3 adjustments. Okay. Right, ළමයි? Okay. Right. So we have done around 3 adjustments. Look at the third one. Pavani, the management decided to write off 500 from Pavani as a bad debt. It's very easy adjustment, lamai. 500 as bad debt. So then what will happen? What is happening? From the debtor, we have to deduct 500. Debtor will be credited 500. And it's an expense. So the bad debt is going to be 500. So debited to bad debt expense, credited to debtor. Debited to bad debt expense, credited to debtor. 500 rupees. It's very easy. Okay. Right. So debited to bad debt expense, credited to debtor. Then they are saying they are going to maintain a doubtful debt provision of 10%. What is a doubtful debt? Now bad debt means lamai, you are not going to recover the money. The debtor has gone bankrupt, so you take the loss and you write off that debtor. Doubtful debt means lamai, debtor has not gone bankrupt, but there are suspicions. There's a doubt that debtor might become bankrupt. So as per the prudence concept, right, we just take the hit, we took the loss, we take the loss, right? Doubtful debt, right? So I have to do the calculation for the doubtful debt. So working number 3, doubtful debt. We'll take the debtor balance, Trade receivables, we got 3,500, 500 was written off. 3,500 is there in the trial balance, but there was a bad debt, no? So the remaining debt is 3,000. So then the closing doubtful debt provision should be, of this 3,000 into 10%, no? 300. Then take the carrying value of the doubtful debt provision. That means, what is my existing doubtful debt provision? Now, I need a provision of 10%. Out of the 3,000 remaining debtors, we think 300 we are not going to receive. So we have to take that loss. Now we look at what is the existing loss we have already taken. Here, doubtful debt provision is 500. We have already taken a loss of 500. Our existing provision is 500. Our existing 500, what we need is only 300. We have already taken a loss of 500, but we really need is only 300. That means we have a over provision of 200. We have a over provision of 200. We have a over provision of 200. Okay. We need only 3, but we have already 5. So we have a over provision of 200. We have a over provision of 200. Then how are we going to adjust this? So over provision is going to reduce my doubtful debt expense. So that over provision, you cannot put that as an other income. It's not other income. So that's a reduction of expense. So doubtful debt over provision. Doubtful debt over provision is a reduction of my expense. It's a reduction of my expense. Okay. And my doubtful debt existing provision will come down by 200. Right? One side it's a reduction of my expense. My existing provision will come down by 200. My existing provision will come down by 200 because I already have 500 now. I need to make it 300. So from the 500 I have to deduct 200. My provision should come down by 200. My expense is coming down by 200. I took a loss of 500 but it's only 300. So my expense should come down by 200. Right. හරි ඒක තේරුණාද ළමයි? It has not been tested so far. තාම මේක ටෙස්ට් කරලා නැති දෙයක්. Doubtful debt under provision over provision has not been tested. Okay, it is there in your syllabus but it has not been tested so far. Right, are we okay? Right, we thought 500 rupees we are not going to recover from the debtors, so we took a loss of 500 last year, but this year we don't need that much, we need only 300. So that excess loss we took we are going to reduce. That is what we are doing. Hari, අනික අය okayද? තේරුණාද? Can we move on? Right. So we have done up to these 3 adjustments. Accrued electricity 200, very easy. Accrued electricity lamai. How are we going to adjust the accrued electricity? One side my electricity expense goes up. Accrued electricity means lamai, you have consumed the electricity but you haven't paid. So it's part of my expense. I add that to the expense and on the other side it's a liability. So I'm going to credit that to the accrued expenses. So my accrued expense will increase by 200. One side expense goes up, even though I haven't paid, I have consumed the electricity, expense goes up. On the other side, my liability goes up. Next one, prepaid water. So you have done a prepaid water of 100 rupees. My water bill, you have done a prepayment. So if you take the existing water bill, that includes the bill payment for the next year. Next year payment has even been done. So that is not my current year expense now. So from the water I need to deduct 100. From the water I need to deduct 100. It's a prepayment. From the water I need to deduct 100. I am going to add that as a prepayment plus 100. To the prepayment I am going to add that 100. Okay. Right. Those are easy ones, huh? Right. So we have done up to this point. Look at the 5th one. Insurance paid is relevant for the period calendar year 2024. Look at the insurance bill. Insurance 300. Insurance 300. Now look here. Working number for insurance. They clearly say from 1st of January to 31st of December, you have paid 300. But our financial year ends on 31st of March, no? Out of this 300, only 3 months we can recognize as an expense. 9 months is a prepayment, no? So 9 months is a prepayment. 300 into 9 divided by 12 is a prepayment. So this 225 is a prepaid insurance. 225 is a prepaid insurance. 225 is a prepaid insurance. Right now, entire thing is under insurance expense. 225 is for the next year. Then how are we going to do that? So if you take the insurance expense Out of that 300, 225 is for the next year. That will be added as a prepayment. That will be added as a prepayment. So prepayment will be 225. That's for the next year. Okay. Right. So you have done up to 5 adjustments. Last one. During the year, owner has withdrawn 500 worth of items from the business. However, this has not been recorded. I'll give the double entry for that lamai. Generally, you don't have to. So working number 5 is goods drawing or the inventory drawing. We put that as inventory drawing. Inventory drawing. So inventory drawing. Inventory drawing. Now the question says there's an inventory drawing of rupees 500. 500 worth of items are being drawn by the owner. 500 worth of items are being drawn by the owner. How are we going to account? One side it's a drawing, no? So we have to debit that to the drawings account. It's part of my drawings. Drawings means equity comes down. And from where should I credit? All the inventory purchases are inside the purchases account. All the inventory purchases are inside the purchases account. From the purchase, we have to remove. So credited to cost of sale. That is where you have deal in the purchase. So credited to cost of sales. Debited to drawings, credited to purchases, in other words, cost of sale. Debited to drawings, credited to cost of sales. All the inventory purchases are inside the purchase account. From there, we have to remove. Someone can ask, why aren't we removing that from the inventory? Inventory, towards the year end, you go to the physical warehouse and you get the inventory. So if the owner has drawn the item, that is not there physically. Right? So the double entry debited to drawings. So I'm going to add 500 drawings here. Credited to purchases or the cost of sales. From the purchases, I'm going to deduct inventory drawing. Inventory drawing 500. Inventory drawing 500. For something like an accounting equation, do we have to make a T account? No need. Okay. Right. So we have done all the adjustments. These are the workings where you will be getting marks. So let me move on to the trial balance to pick the balances. Right. Okay, land value is 3,000, 3,000, 3,005, 2,005. Land 3,000, 3,500, 25 plus 500 is 3,000. 25 plus 500, 3,000. Okay. Depreciation 600 and 400. Depreciation 600 and 400. 600 plus 175, 775. 400 plus 550, 950. You have to add that current year depreciation. No? Trial balance gives you the opening balance. No? We calculated the current year. No? You have to add that. Right. Next item. Opening inventory 6,000, purchases 20,000. Opening inventory 6,000, purchases 20,000, sales 35,000. Sales 35,000. Okay. So this side done. Next side. Provision for doubtful debts 500. Provision for doubtful debts 500. Okay. 500 minus 200, 300. 500 minus 200, 300. We had 500, we remove 200. Then the capital account 11,000. Capital account 11,000. Capital 11,000. Electricity 3,000, water 500. Electricity 3,000, 3,000 plus 200, 3,200. Water 500, 500 minus 100, 400. Trade receivable 3,500, trade payables 2,300. 3,500 minus 500 is 3,000. Trade payables 2,300. 2,300. Salary 6,000, traveling 300. Salary is 6,000. Traveling 300. Traveling is a distribution expense. Traveling 300. Cash in hand 500. Cash 500. Cash 500. So cash 500. Cash 500. Bank OD 200. So that's a current liability. Overdraft 200. Bank OD 200. Insurance 300. 300 minus 225 is 75. Advertising 500. Advertising 500. Advertising 500. Drawings 400. There's another drawing 400. 500 plus 400 is 900. So drawings you have to deduct, no? Drawings is something that you are going to deduct. Right. Okay. We have taken all the items. Now we can close the account. Cost of sales 6,000 plus 20,000 minus 500 minus 400. Sorry, minus 4,000. I'm getting 25,100. 25,100. 25,100. 35,000 minus answer 9,900 is the gross profit. Distribution 500 minus 200 plus 300 plus 500. 1,100. 175, 550 plus 3,200 plus 400 plus 75 plus 6,000. 10,400. 25 is the loan interest. Net profit 9,900 minus 1,100 minus 10,400 minus 25. We are at a loss of 1,625. Profit, it's a loss 1,625. 11,000 minus 1,625 minus 900. 8,475. Loan balance is 500. 2,300 plus 200 plus 25 plus 200. 2,725. Plus 8,475 plus 500. 11,700. 11,700. Here it's 3,000. 3,500 minus 775. 2,725. 3,000 minus 950. 2,050 plus 2,725 plus 3,000. 7,775. Here 2,700. Prepayment total is 100 plus 225, 325. 4,000 plus 2,700 plus 325 plus 500 is 7,525. 7,525. 7,525. So the total you'll be getting 15,300. 11,000. Give me a quick minute. I don't know whether I made a mistake when preparing the question. Give me a second. $600 plus $400 plus. Please check the calculations whether I have made any mistake. Right. පොඩ්ඩක් බලන්න මට calculation mistake එකක් තියෙනවද කියලා. 5 7. Profit is it? Gross profit. 6,000 plus 20,000 minus 900. 35,000. Yeah. Should be correct. $1,625. Sorry. Sorry, gross profit, I have made a mistake. Sorry. Sorry for the inconvenience. Right. I have taken this as 400. Sorry. දැන් 4000යි කියලා ලියලා තියෙනවා මම ගත්තේ 400යි කියලා. Sorry. 6,000 plus 20,000 minus 500 minus 4,000. Sorry. 21,500 it should. Sorry for that. 35,000 minus 21,500. 13,500. Sorry. 13,500 minus 1,100 minus 10,400 minus 25. It is not a loss, rather it's a profit. Sorry for the inconvenience. It's a profit of 1975. 1975. 11,000 plus 1975 plus minus 900. 12,075 plus 500 plus 2725. Yeah, 15,300. So your balance sheet gets tallied at 15,300. Right, sorry. Right. I made a mistake that closing inventory in the calculator, right? Okay. Right. Okay. හරිද ළමයි? Right, I think we have spent a lot of time. හරි. මේක okay ද question එක? It gets tallied at 15,300. Right? 15,300. Okay ද? Right. Okay. So that covers the entire paper. So we started at 7 and it's now 10:30. So we spent 3.5 hours and we discussed a full paper, right? Full paper covering all the aspects in your AAT financial accounting subject. So I have done it in a very detailed manner in the V-Learning packages. Those who have purchased, they know. So as JMC V-Learning, what we request is to stay with us because in AAT2, AAT3, chartered, up until you become a chartered accountant, we'll be there to help you, right? So thank you Lamai for joining. I hope you all have learned something from the session, and please feel free to share your thoughts about the today's session, right? So this is my number. If you have learned something from the today's session, please share a comment whether it is good or bad, right? So share your genuine, authentic comment about the today's session, right?